All right. We are at it right on time, right on the money, 9:15, 12:10, 2025. Welcome to Chuck for Options. Today's the big day, the day we've all been waiting for. December 10th, my mother's birthday. Happy birthday, Mom. Um, I wish you a happy birthday. I'm going to give you a call later. I was going to give you that little sneaky call at 12 o'clock, but I just spoke to you a few hours earlier, so you were asleep. So, you know, got to give a shout out to Mom. You gave me everything and everything you given me, and you me still understand. You gave me strength to go on. There are so many times looking. All right, that's it. I just wanted to sing my mom happy birthday song. So let's go. Today's the big day, FOMC day. Let's get it. Let's get it. What did I just do? That was weird. So, we have a big day ahead of us today, man. Yesterday was a big blah. The past week was like a big blah, honestly, in my opinion. But I want to say that this week, starting on Monday, we didn't see too much action in the SPY option chain. Or just like at all, maybe some outliers, but we don't look everywhere. There's only certain places we were looking. We're day traders. We don't trade every day. We see a good setup, we want to take it. This is why we want to mark our tops and our bottoms. We want to follow the price. Let me update my journal. 12:10. All right, let's get our levels. Actually, that doesn't even matter. All right, so we're seeing a little breakdown in price. We're seeing a little breakdown in price. This price structure started to change around like 9 o'clock. So we want to watch out for that 684. What? 684.07. 407. And we hit a low end. 682.01. 682.01. So one thing that they're not going to be able to do, the market makers, they're not going to be able to uh open, close, watch contracts. All right. They're not going to be able to pin us today. It's going to be too much volume, too much money, too much going on. They're not going to be able to pin us. They were able to pin us the past couple of days because we were low volume, and people were waiting for the move. You know, so if if you're ever in the channel, you have any questions about what I'm doing, what's going on, just let me know. But if I didn't catch you before, I'm catching you now. Good morning. Uh, Today is Judgment Day. Daddy Powell, he's gonna wave. He's gonna wave that BD. There we go. There we go. There we go, baby. Hello, Mike. There we go. We got it back on. Let's go. All right, so we're gonna start waving this horn now. Before, when we would kill it, we would hit the horn and hit the siren. I love. Oh, I love this. Oh, I love this thing. All right, bet. So we got our horn back. We got our megaphone back. All right. So only big plays. Only big plays. We're not gonna blow out everyone's ears on small plays. If you have a strategy, yo, what up, bro? He said, I was like, what the hell? I know, right? Today's going to be a big strategy day, man. Today's going to be a big day. Big day. Big day. Today's going to be cool. So for the top end, I think we can easily find our top end calls. All right, now for the low one, I think the low one is going to be special. All right. So I have my contracts I want to take a look at. We have our pre-market high. We have our pre-market low. All right, let's get to the journal. That was Tuesday. Yeah. We can work from the bottom up. Yesterday was just such a crappy day. I mean, like nothing happened. It was just that one move. That's it. It was just that one move. It was just that one move. The report. That's all. It was just a report. Get rid of all this stuff. All right. Our pre-high we hit 684.87. 87. Our low I seen 682.01. Let's give it some room on that box range. Today is Wednesday. Mother's Day. We have Daddy Powell at 2:30. And we have minutes. We have minutes at 2. Fed minutes at 2. All right, so here's our range. A high top end pre-market today 684.87, low end 682.01. This is still special. Okay, this is still like today. This is on the table today. No high, no low yet. No open, no close. We do have contracts. All right, we do. Let me see if these even make sense. Let me just double check. Yeah, that would definitely 100% be a level. That would 100% be a level. All right, yeah, that's nice. I just wanted to make sure I wasn't just um you know what? In this 686, and then we're gonna go 689s. 689s. Those are really good choices. These are the puts. 670 put. Um, 660 put. I like it like that. All right, now let's get our VIX. You see, VIX is up. Whoa, VIX is up. 4-3. All right, VIX is up and alive. Okay, so here's our notes for today. Oh, so far. Wednesday, December 10th. We trade the SPY. Today is we have Daddy Powell at 2:30, Fed minutes at 2. High pre-market 684.87. We hit a low 682.01. We do have a gap here. Technically, we are within a range. I'm going to go out and I'm going to see what kind of range we're in. No high, no low, no open, no close. We have some contracts here. We have our calls. We have our puts that we're going to look at today. Actually, let me do this. This. 86. This. All right, now we want to boom. Now, how you trade is going to be important today too. Okay. Now you also got to remember today is only today. What about tomorrow? What about the next week? I mean, what about um Monday? You know. So there's a lot of different things that you should definitely keep in mind because it's definitely going to be very important. Is this carp? No, that's not carp. I thought carp was talking. All right. So I would definitely say take your time today. It's going to be a long day. It's going to be a frustrating day. Um, I'll be right back. Let me get ready for this market open. All right. Sorry, couldn't quite be there for open, but I was there in spirit. All right, let's get what's going on. All right, we're looking down on the SPY. Crazy there. Boom. Yeah, guys. Hey, what's up? Is my mic on? Yeah, my mic's on. What's up, guys? I'm sorry. I was just looking at contracts and everything. Good morning. Valentine Diaz, what's up, bro? So, we went over the journal. I'll go over the journal with you if you want to. Right now, I'm just sizing out different contracts and I'm looking at different contracts and everything. Um, if you got any questions, you can ask me. You can ask anyone in chat. It's probably just Rich, but we follow price. We don't try and guru. So I'm not here to necessarily entertain you. So you're not going to hear me just needlessly talking uh about just like random dumb shit. If you want to, I can, but I'm not. You see, I'm talking to you and I'm missing out on trades. Wow, these things are up a lot already. I I wanted to open up in short. So, we all have our different ideas and everything. You don't want to necessarily, shoot someone in the foot for their idea. Um, but we all have our ideas, and it's okay to definitely respect someone's ideas. And if you want to, curve someone on getting them, straighten them out on a certain trade or something like that, if they let you into the trade. So I say, if you talk about it, then we can talk about it. You just can't talk about something and not necessarily just talk about it. All right, we don't do no bragging. We don't talk about numbers. We just talk about the play because the play matter. And if you're in the play, then you see how much money is being made. So there's no reason to talk about money, just the play. All right, I just put a little skeleton crew out there. Those puts are really nice. What is this? Oh wow, that's SoFi play. Hmm. Yeah, yeah. SoFi was definitely. I can see how my SoFi contract change up. So, what do you guys think is going to happen with FOMC today? Do you think it's priced in? Where where did we price it in? That's UVIX. There we go. When was this? 11/20. This is November 21, 24, 25. This was very bullish. Look at this. Look at this. This was like a couple days. Dropped this thing down a couple days. We were trading that. What's the bottom of this channel? Is this all the way back in? Yup. How about to say that's too far back. So that's definitely not it. Wow. This is one day. This is 10/10. This is 11/20. What is this? 70, that was 20 points. 71. Another 20 points. Look at that. Look at that. Holy shit. 10/10. This is 11/20. Fuck. But this is bullish. One, two, three. That was a week back. Alright, this is what we want. Alright. So the big thing is we're gonna have two markets. We're gonna have this market from 9:30 to 2 o'clock. And then from 2 o'clock on for the rest of the day is going to be FOMC market. This is going to be totally different than what we plan later on. What's going to happen later on? So me, I already have longs. I have my longs. Today I'm looking for a short. If I can find a short, I'm eating off the short. If I can get in there with the long, then like right there, that would have been a nice long right there. I could have picked that up. I should have picked this up. All right, so we're gonna have 9:38 lower day, 9:37. We're gonna mark this, put this on the timesheet. Right now, let's go 37. Gonna put that time frame right there. All right. 37. 681, 31. All right, so this would have been a perfect time, if you're looking up. This is pre-market right here. Nvidia going green. It's gonna be a lot of fuckeries today. Look at this VIX. What the fuck? VIX went up. All right, there we go. There we go. Right now, I'm listening to a few different people and news. I'm honestly not looking for too much until like 2 o'clock. Honestly, last FOMC, I did really well last FOMC. It was really nice. My strategy played out. It was sick, and I got that strategy off of the previous FOMC. I noticed some weird things in the option chain, and I started to attack it like that, and man, it worked out. It was lovely. It was lovely. Couldn't lose. Couldn't lose. Same thing today. You can't lose. This thing is going to swing so many different ways today. If you buy the right contract. Amazon cooking, Palantir call. I'm holding small puts, gap filled. Mm. All right. Okay, so next week we get our jobs data for November. Today going to be a chill day, man. All the money's going to be made in like a span of like 2-3 minutes. What are you guys trading today? Are you trading a certain ticker, or are you trading just SPY? I'm looking to price the 675s. I want to attack the 675s. I think I want to look at those. I should have bought them. I should have bought them at that top. I should have bought them at that top. Even then, even now, they're not like the worst price. All right, this is our new high of day right here at 52. We can get rid of this 54. Put a 2, new low of day. Oh, I'm sorry. New high of day. 683 point what? 33. High day. Low day. This is the low over here. Boom. We got a low, so this is how we tick. 17, 20. All right. A 20-point move today in either direction. Sheesh. So 20 points would be 702 or 52. You said FOMC, we will rally. You said I'm in Tesla puts right now. FOMC, we will rally. So you're looking for the rally. What contracts are you looking at for the upside? Dude, we've rallied. Oh my god. Like it's going to be like a 10-point rally. You know. I'm maybe 7, maybe a 7-point rally. So, and remember, this is at 2 o'clock. This is at 2 o'clock. We're going to be in a different theta, theta territory. We're going to be in the beginning of the last third of theta territory. Right now, we're in the first third. Get the day, the whole trading day from 9:30 to 4 o'clock. Okay. Split it in 3, divide it in 3. When it comes to the zero dates, no, all the contracts actually. Okay. Now they're going to have a different rate of theta, but they're still within the same window. Okay. When that 2 o'clock time frame comes, we're going to be in a different time frame. So if the contracts weren't moving, the contracts are getting hit with theta. Okay. This is why you really want to wait, because whatever way that thing is going to swing, those contracts are going to wake up. They're going to wake up. So you say we rally. Okay. Make sure you complement that call with a put, because that call is going to appreciate more than that put. So you're going to make less money, but you're going to make money. If you just go one way and it goes the other way, you just lose. But if you write the correct spread, you're exposed both ways. Now, the only thing it has to do is move. Okay? That's a good risk reward factor. If you are extra bullish in whatever way you want it to go. So if you want it to go down, or if we want it to go up, if you're hype on whichever way you want it to go, just make sure you write out like a good ratio. You know, three three contracts, three calls to one puts. If you're like really bullish, or if you're really bearish, if you think it's going to go down, write three puts and one call. You know, so if you're wrong, it won't hurt that much. You know, you're at least exposed to um a direction. So, not financial advice. I'm not, guruing anyone. You know, I ask you guys all the time for suggestions, uh, and what you think about stuff. We wait. We are going to wait. That's SoFi call is pretty good. I like that. I might want to get more of these actually. Hmm. Hmm. So I asked ChatGPT some questions. I asked. Oh wow, I even wrote it in the wrong section. Okay, I said show me the dates following the FOMC on SPY. Okay, uh, there you go, right here. Okay, the FOMC held a meeting December 17th, 8th to 18th, 2024. They cut the U.S. federal funds rate by 25 basis points, 0.25%, bringing the target range to 4.25% to 4.5. The move was largely expected by the markets and was part of a broader shift toward easing after a long period of higher rates. I'm guessing the QT. The rationale was to support the economy given signs of slower growth and to ease credit conditions under persistent inflation pressures. How markets like SPY and so then there's another section. How markets like SPY and S&P 500 react to FOMC and why F and why FOMO happens. Ooh, historically, stocks tend to rally around FOMC meetings, especially when the rate cuts happen because lower interest rates make borrowing cheaper, corporate valuations more attractive, and future growth more viable. In 2024, many traders and investors interpreted the upcoming Fed cuts as a green light for more risk taking, which fueled a strong rally and likely contributed to FOMO, fear of missing out entering equities. Oh, wow. That sounds like a gamma squeeze. With lower rates, bond yields fell, which pushes investors to equities, which is stocks, seeking returns, a common driver of equity rallies after monetary easing. All right, what happened after December 24 decision? The rate cut and associated market optimism supported stock buying. 2024 ended with solid equity gains after a year of volatility of rate tightening. For a number of market participants, a rate cut reinforced expectations of easier monetary policy ahead, which kept risk sentiment relatively high. According to historical studies, around FOMC announcement days, markets often see above the average returns, sometimes short term spikes, compared with non announcement days. However, not every cut or announcement leads to runaway rallies. Other macro conditions, inflation, well, I guess this is in parentheses, it should say such as inflation data, economic growth, global risk also matter, which means FOMO spikes can be followed by consolidation or pullbacks. Evidence suggests these announcement effects often produce volatile swings, not always smooth rides. Short term downside. What what that means if you brought in on FOMO. Okay, no. Key lessons, what to watch or learn. The FOMC remains one of the most powerful drivers of short term equity moves. Rate cuts or even hints of future cuts tend to lift markets, but the magnitude depends on economic conditions and investor sentiment. FOMO often happens around FOMC decisions, but after the initial surge, markets may consolidate or correct, but don't assume the rally lasts forever. For long term investors, FOMC events are important, but underlying earnings, macro data, and evaluations remain crucial. So, this is what they gave us so far. Okay. Then it asked me, if you want, I can pull up a full 2024 SPY chart highlighting every FOMC meeting, rate cut, or keep steady. This way, you can visually see the correlation between Fed actions and market moves. Do you want me to build that chart now? And of course, I said yes. Okay. So the AI definitely knows how I think. I think I told it I always want to see something visually because I love getting that data. It's all about the data. I can build you the FOMC highlighted chart, but I need real SPY historical data to plot it. I cannot download market data inside the Python environment. No internet access inside the notebook. Okay. Two options to continue. You choose option A. You give me the SPY price data. If you pace daily, monthly, and closing prices, I will generate a clean professional chart with it. Oh my God. I have all that data already in my journal. Let's go, journal. W journal. Let's go. All right. Can I import my notebook into this? Dude, if I can put my notebook, if I can get my notes and import that into this AI, oh my God. That would be incredible. If you paste dates, daily or monthly, and closing prices, all right, I have all that. I have all that. I would generate a clean or B. I generate a concept chart. I can make a real PNG image showing FOMC dates, timeline, trend lines. Okay. All right, let's go B. Give me the B first, and then let me get this data and everything together. Because we have all of our open and closing prices for the past like 4 months. I think I have 3 FOMCs in these notes. No. Give me this. So if you're bullish, right there was when you're supposed to definitely get your calls. Who's calling me on Discord? Yo, hello? I can't hear you. I am trading right now. What's up? Huh? No, I can hear you. You're just loud. But what's up? What's good? Um, you said I'm looking at 470 on Tesla though. Upside 470 upside, downside 440. Yep. No more SGov for me. SGov, what's that? Rich. Yeah, Mo. I'm trading right now. Today's a big day. FOMC. No more SGov. What's SGov? Rich? What was I doing? Oh, okay, right here. Here's your schematic chart, your schematic FOMC chart. Let me know if you want a version with candles. Yeah, give me candles. I don't want to see no freaking lines. Are you gonna play some POE too when it drops, Joe? Yeah, yeah, hell yeah. I'm gonna be on that thing. Yeah, everyone can play the new character. I'm gonna be the Oracle. I'm going Druid Oracle. They have a shaman, a shaman ascendancy, Oracle ascendancy, and I think there's one more. I think they give you 3. What time is FOMC decision? Come on, people. I don't know. It'll be terribly nice. Look at that. Oh my goodness. Look at that. They still don't want to move the market. Look at that. Look how fluid they made this whole move right here. Look how fluid. Look how fluid it looks like they just turned the computers off yesterday. Oh my gosh. That's that's just so funny. It's so funny. So funny. 12.10. That's so low. And $2. It's fine. Rate cut today. What kind of poll is that? All right. So here's a schematic candlestick chart style for FOMC events. All right. This. Oh, day 1, day 2, day 3. Symbols. Time scale, price scale. Oh, wow. This is interesting. It open, close, open, close. It open there, close there, open there, close there. Previous day high, low. Yeah. It was just grabbing those technical levels and everything. Wow, that's interesting. Do you guys want to see this chart? I don't even know if anyone is. You want to see this chart or no? This is from my chat GPT. August, November, February. Oh, wow. So this is all the FOMCs right here. Decision, the cut rate decisions on this one. Interesting. No, this is I think this is the NAS. All right, that's interesting. That's hot. That's very interesting. Um, did you want to see it? No, I don't want to say anything. Candlestick gives. Yeah, no. Over these FMC events let you visualize was the market reaching up or down after the announcement. Well, it definitely fell. It fell day 1. It said day 1 there was a big fall. Day 2 there was a spike. Day 3 it went back down. So I'm gonna do some shopping for Monday. If we like, I can also nah, we don't need to see any more of that stuff. But that was good though. That was really good. I wasn't even in the wrong section. I was in my game developer section of ChatGPT. I wasn't in my Jerome Powell's role. Because when you use ChatGPT and different AIs, you have to give the AI a function. You know, you have to give it a quote unquote personality. You know, so then when you ask it a question in the you so for this Jerome Powell role on my chat GBT, I said I prompted the AI to answer me as if you're Jerome Powell. So when it comes to all my questions and everything, I'm getting a lot of that information from the mindscape of Jerome Powell. You know, so that's really good stuff right there that I like to personally do. You know, I just don't want to talk any old type of AI. I want a specific AI. But then I also tell my AI like about me, how I want things answered. Because sometimes they like to give you fluff. Not really fluff, but they okay, whatever, fluff. They like to give you a lot of fluff. I just want the meat and potatoes. So a lot of times, for a lot of the questions I like to ask, I just want sometimes just a yes or a no. Um, ask them to make it less wordy too. That helps. So whatever type of AI you use, you should really honestly talk to it so it can understand you. So later on when it comes after your family, it'll just get you real quick. So and honestly, sometimes I even say please and thank you. Bro, I know. But I do. You better, bro. You better, bro. When this shit becomes sentient, it's gonna be like, damn, I remember, damn, you was just not you just say fuck me and you wish AI would never come alive and shit. Like AI gonna be remembering all that shit you wrote about it, man. You better be nice to that shit, bro. I be telling it please and thank you. You know, one day I'm gonna throw in the master and I'm gonna see what it says. It's gonna say dot dot dot. I thought so. It's gonna say dot dot dot. I thought so. No, but seriously though, say please and thank you to your AI. What is this? What is this? What is this? You gotta let them know. It's all you always at risk, woman. You around me, you always at risk. And don't be waving that thing around me like that, smelling all good, looking all nice, looking all shiny. Shoot, get gripped up real quick. All right. Yo, Rich, if you want to join Discord, just let me know. All right, so there's a lot going on right now in the markets, man. I hope you guys are strapped in, strapped on. Um, you said SGov and 3-month U.S. Treasury bond yields pay monthly dividend, but bad with rate cuts. Oh, so you were receiving a dividend in that, and with this rate cut, your return got lower with the bond. Oh, so I was reading the bond stuff and then that picked up on you. Okay, so you got touched by that. Yeah. Yeah, FOMC is crazy. Everybody getting touched today, yo. Whether you on this side or that side, everybody getting touched today. Yeah, it's crazy, bro. Everybody getting touched. Your 401k is getting touched. Your Roth IRA is getting touched. The bank already don't offer you a real return, but that is getting touched. Refinancing is changing. The whole economy is changing today, man. At 2 o'clock, some stuff already went out. Now the thing is, rate cuts are supposed to be bearish. I'm bullish. Rate cuts are supposed to be in the time when the economy is bad. This whole time, Trump in the stock market, Trump's been pumping the stock market, saying that the economy is good, we good, but he's pushing for rate cuts. Whenever we get bad news, it's actually good news because that's pushing for rate cuts. We've been getting none but good news. If anyone want to add anything, is going to protect you. Pays monthly dividend, but bad with rate cuts. Yeah, the monthly dividend. Yeah, I wouldn't say give up a monthly dividend. That's a good long. You definitely want to build out a long position. Whether the markets go down or up today, you want to be a participant in the market. But over the past couple weeks, my suggestion would have been take some risk off the table until this rate cut decision. After this rate cut decision, then great advice. Yeah, 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 yeah. Thank you. Then get into buying. So Joe, I wasn't following you around or anything because it wasn't a good time to buy. So I wasn't, you know, um, I was going to let you go at your leisure. But after today, I was going to update you and let you know, look, if you want to start buying, whether it's me helping you or you doing it, now then's going to be the time after this FOMC cut. Do you have a Robinhood account? Do you have money in the Robinhood account? Put put like $20 in it. Put $20 in it right now. I'm gonna give you 20 things to buy right now. It's gonna probably be a lot less than 20, but I'll give you some things to buy and just buy one. I'm not familiar with that platform, so I wouldn't be able to help you out with any of uh uh the UI too much. Yeah, 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 yeah. Absolutely. Mm. Is he said a day? I'm fired. Holy shit. Um, what about is that your brokerage? Is that your current brokerage? That's your current brokerage. All right. Yeah. It's going to be like 10 or 15 bucks. That's it. Just invest 10, 15 bucks into me. That's all. Now I told you. Now today gonna be crazy. Now today gonna be crazy. So you're gonna see those numbers fluctuate like a motherfucker. I knew I should have bought more up there. Uh, I loaded up anyway. I should have loaded up more. Man, today's gonna be crazy. 2 o'clock. Oh my god. How did you know to be on today, Joe? You're never on during the day. Oh, you're off tonight. Oh, you picked one hell of a day to be off, man. You just off, yeah. Today is one hell of a day. So I would suggest buying a lot of indexes. There's a lot of indexes that you definitely want to take a look at. And there's some tech that you want to take a look at. Like I said, just put like $1 into each one, and you'll be happy with that. I don't think many, if any, are even in what's the name? Um uh Tech. Also is good because all you have to pay is state tax on it, and it's nothing except for state tax. Yeah, yeah. There's a lot of tax harvesting techniques too that you can do. Um, I think there's a lot of different ways to do it. You know, I was going to be a CPA once upon a time, and so I know a little bit about tax tax law. Oh my god! Last night, I wanted to like get hype, so I watched Wolf of Wall Street. The night before, what did I watch? I watched. It was a stock related movie. What was it? No, we on stream. What did we watch? Ah, what the hell did we watch the other day? Yo, Rich, help me out. What did we watch the other day on stream? And we got kicked. Although it was still fucking YouTube. Yeah, they turned us off. And this was a movie on YouTube. This was a fucking YouTube movie. Well, when I think of it, I'll think of it. And I think it was last week we watched a documentary on the stock market. And that documentary is awesome. Oh my god, it's amazing. It's so amazing. So good. So good. So good. Because during the day, there's like lull periods. There's periods where there's like nothing going on, and after like the past couple of weeks, it's been a lot of lull leading up into the FOMC. So it's definitely good to have some type of because you don't want to just start trading shit. You don't want to just start slinging because now you're doing all this slinging for nothing. I could have got more. That's fucking. I could have got more way cheaper. I should have got way more. I knew I should have gotten way more at a way better price. That would have been. They would have been good because they're rocking right now. They're they're rocking right now. They're damn near 100% already, and the day didn't even happen yet. Because then, so what I did last last FOMC. Now, I've been trading the FOMC for years now. So I've been developing the strategy. So what I did was I would go on like 5 contract heist, okay? Because let me reword this. Erase some of that. Because I have to say it's safe. Because if I don't say it safely, um, it can break a lot of hearts. It's going to break a lot of hearts. The thing with options, man, you got to be you have to be so careful, and I don't want to say something that's going to endanger someone financially. Uh 'Cause there's so many different ways to play options. So many different ways. Oh my god. So many different ways. But so I would open up some contracts, I'll say that. And and as they would, gain price and everything in the direction that we're going, then I would sell them, and then I would just let them hang. I would let like 2 hang, 1 hang. Uh and then on the new channel, I would just do the same thing. I would let it hang. Take profit principle, let it hang. And then for the Fed decision, take that play. Because you're gonna have a call somewhere and you're gonna have a put somewhere. That's already paid for. That's already you took profit for. Um, you know, it's just so many different ways that you can play FOMC day. Because the right contracts, they're just not going to go bad. They're not going to spoil. You're going to be able to make money on every wave, every wave, every wave. The money, the market makers, they were really greedy over the past like week or two. They really didn't move the needle. They would kill us on theta. Today they can't do that. They can't do that. This thing is going to go. This thing is going to go. I don't know which way it's going to go, but it's going to go. You know, I have calls out. I got puts out. You know, I got profit up. It's just today's going to be an easy day. It's going to be a highly volatile day, but it's going to be an easy day if you watch your contracts, if you play your channels. We're writing the channels down outside of me talking right now. Maybe we should update this puppy because we had a structure change right here, 1020. Let me update this 1020. Is this high? Yeah, this is high. 1020, new high a day. New high of day. 683.46. All right, structure exchange down. This isn't a new low. This is just a lower low. Then we hit this lower low at 1041. 1041. Lower. I'm sorry. A higher low. 681. 57. 67. 67. Let's put a space right there. All right, so we have a higher low at 1041 right here. So that was a squeeze. That was probably a really good play. That was a good play if you played it right there. That wasn't even high a day. That was high day. That was higher day. All right, and now we have a range, or at least we have a top. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. We hit this top 5 times, tapped it 5 times. We hit this low. We didn't break the low. 681.67 versus 681.31. All right, so that's close. That's very close. 36 cents. That's a tap. We can take that as a tap. That's a tap. But we can't call that a range. That's the whole fucking thing. That's the whole thing. All right. So this was the new low. So if you're looking for calls, that was the good time back at 1041 to open up a call to the upside. You know, right there. That was that was the that was the bottom. That was the second bottom that we hit today. So even if we go up into that range again to the upside, that's money made right there. From this right here, it depends on how soon we get back up there. But if we get back there within like the next that like that's money made right there. You know, from that top end to this low end, of course that's money made. You know, because that's the high of day. It went down all the way down to the low of day. You know, I seen my contracts. You know, so now this is a new channel. Now we're in a new channel since 1041. Structure change upward. What did I put? 1041, 41, higher low. Ten 41 and 41, a higher low, 6187, structure change up. All right, update it. All right, so boom. So now we're in this new channel right here. All right, that's a whole channel right there. I wonder, are they liquidating stops right here? When the dip keeps dipping, it's about patterns, not Fed cut or whatever news. I wonder. Probably going to keep this garbage all day until 2:30. It's it's going to be crazy, man. Another thing too is if you're a trading spy, I wouldn't look at just today when you make your plays, you know. So whatever your plays are, make sure you look 2, 3 days out. Today is Wednesday. You're going to see 10, 11, 12, and then next week is going to be the 15th. That's Monday. 15th is Monday. I think on Friday I'm gonna attack Monday. It depends on what happened. There's times to swing plays and there's times not to swing plays. I think now we can do some overnights. Right now it might be a better time to do overnights. CMG and Starbucks got wasted. El Chipotle. No more customers due to 5 years of raging inflation. No, they just raised their prices like, or at least Chipotle raised their prices like a mother. I remember a burrito bowl used to cost like $8, $9. That bitch got up to like that just got up to like 19, $20. I like to get chips and queso and shit. I would ask everybody, yo, I get a bowl for me and Shorty. Now that shit like $50. Mm. Are you having an emergency? Mm. You know what? I got caught up. I got caught up. I got caught up. Shoot. 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 What is the rest of everything doing? Here go Nvidia. Nvidia. What is Apple doing? What is Apple? Apple? Where art thou, Apple? Here's Apple. Here's Hood. Meta. Avgo has earnings today after market or tomorrow before market open. So that can also affect some plays too. Uh, I didn't write that down, so I forgot that. So now take back all that overnight stuff. You know, we still gotta wait because Avgo is gonna be a market maker mover, motherfucker. I knew I should have bought more. Nvidia dropping, AMD dropping, SoFi popping, Q's dropping. Beyond Meat, Beyond Meat popping. Okay. Oh wow. Netflix is really low. 6 month low. That's crazy. Whoa, 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 whoa. You saying sensitive information. Chill, chill. Whoa, 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 whoa. Schmack. Let me get my pen and paper. Say them numbers one more time. So Wolf of Wall Street, right? Remember when he was on a boat and he was trying to bribe the cop, and the FBI agent was like, "You know what? I just need you to just say that, just slower, and just say it one more time." And then the guy behind him, the guy behind him that was wearing the wire was listening to him and shit. Oh, that movie's fucking awesome, man. Oh my god, dude. There was a point there was a point in time in my life where I was living that lifestyle. It was nasty. It was nasty. All right. All right. All right. So we're gonna have fun with this, okay? buy $1 in Palantir. Uh, You might want to wait until after today, but I mean, yeah, PLTR. Yeah. Mhm. All right, I gotta see where this. Where these what's names are. So I'm gonna help a friend out. I'm gonna help him build a portfolio. Um, Let me. I guess I have to do a little bit of homework. Just whipping together something real quick. But the thing about that is today we're going to see a lot of volatility. Um, so it's going to kind of suck when it comes to getting it right for him. But I'm up to the challenge. Woo, woo. um, Go to the little person and go to transfer. Little person. Yes. Now, I don't know what kind of account you have, but I have instant deposit. I don't know if you have instant deposit or not. I think you might. No, I don't think so. You might just have to sign up for their Robinhood Gold, and that's a yearly subscription, and they give you like a higher percent of money, return on your money, and some other stuff. Uh, but it also gives you uh, instant money, instant deposits. Oh God, blah, instant money. What the fuck? Instant deposits. I believe so. Yes. I'll be right back. Oh, snap. My bad. I'm back. Damn. If you wanted calls at the bottom of that channel at 11:03, that was it. Of course, because that was like a low, a big low down there. Joe, you here? Um, hold on. Buy/sell intraday support and resistance. Yep, that's exactly what today's going to be. If they're giving such a big range like this, look at that. That is incredible. That is incredible. Hmm. All right. Are you ready? I get ring, ring. Yeah, that one. Mhm. 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 Yeah, it's okay. Just one. SLVP. Mhm. 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 GDX. Gold miners. Gold miners. Vinek. Just one. And then yeah. And then buy one of the junior too. Do you see the J? SMH. Mhm. Yeah. Uh VGT. Mhm. Oh, right. Vu. Mm-hmm. Mm-hmm. And then and by the G, by probably all three. You can get all three. Mm-hmm. All of them. All three of those. All three of those. Yep. How much you got now? N- No. Just no. Just everything with Vu. All right. Google, Amazon. Yeah. Yeah. Google, Amazon. Mm, yeah. Microsoft, Apple. Yeah. Ye- uh. Yeah. You can get both, but just the one is good enough. But you can get both. Uh, get $1 in the SPY. 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 The SPY. Mm-hmm. Get some SoFi. SOFI. Yeah. Yeah. So, yeah. Oh, that's why it sounds like that. Well, you say it like that phonetically because it's capital. Mm. Mm-hmm. And what do you have now? How much do you have now? No, 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 no. But how much? But how much you have left? $4. So with that $4, Apple, Nvidia, Apple, Nvidia. You already got Apple. All right. So get Nvidia. Get Nvidia. NVDA. NVDA. Tesla. TSLA. And buy $1 in Bitcoin and $1 in Ether, and watch it for a little bit. Now, when it comes to stocks, yeah, $1 in Bitcoin and $1 in ETH. All right. Did you didn't grab Tesla? You got Bitcoin and Ether? Bitcoin. Yeah. No, we don't know. I mean, it is the best recorded asset, performing asset in history. But we don't even know. I mean, it went up to 125. The fuck, it dropped to 180. That was like 40 fucking percent right there. 30 something percent. Like it can go past that. Like Bitcoin is crazy. But yeah, watch those. Have fun with those. Hmm. What do you mean? What are you supposed to be looking at? You can go to your home page and you can go down to your stocks and ETFs, and you'll see everything that you own right there. Hmm. And then that's it. Well, right now it's don't worry about pulling it. Okay, right now you're just seeing the rate of return. So in about um give it about a month, and about a month, because a lot's going to happen between today, the end of year, and then there's usually a big sell off in January, in like mid January. So we're going to look back into it in like the beginning of January, um, and then we want to see, what's what went up, what went down. If something goes up 2%, that dollar is going to go up to 120, $1.20. you know if something goes up 100%, that dollar is going to turn into $2. I doubt something's going to do that within a month, but you never know. But you'll still see what's working and what's not working, what's consistent, what's not consistent. Now, there's also some choices in there that are dividend stocks. Right now, at this dollar, it doesn't mean anything. But if you bought 100 of them, and you get a dividend every, 4 times a year, you know, um, that matters. Maybe not for the first couple years, but after a few years, that dividend's going to start is going to start feeling you're going to start feeling it. Then as you add on, as the stock go up and down, you want to add, so you want to find something that you can also grow with too. But there's also ways to make income off of the equity that you hold. And I like to give that example as in, uh you buying a house. Let's say you have a house and you want to rent out rooms, you know so what does that do? You bought the house, so you have that big cost right there. Exactly. Now you start renting out the rooms. What does that do for you totally? For stocks, it lowers it creates income. Exactly. For stocks, it lowers it. There you go. So there's ways to own stock, and you can treat it as you own in a house and you renting out rooms. That's going to lower your cost average of you buying into the stock or buying that home. And then after a while, you're going to be above, you're going to be in profit. And then, good stuff, great stuff. So it's such a finesse um, in the stock market. It's crazy. It's crazy. It's crazy. A lot of those are ETFs. You got a lot of technology in there too. Um, you got a lot of technology. You also got a lot of the Mag 7. You got some QQQ. You didn't buy QQQ, but you have a lot of the QQQ. But you also had a lot of ETFs that follows the QQQ. You're exposed to silver. You have a lot of exposure. You're exposed to silver. You're exposed to gold. You know, um, I think you're going to see some cool things with that $20. I think you're going to see some really cool things for that $20. Well, well, give it a little bit. See what's working, see what's not. Like I told you, this next month is going to be volatile as fuck. Now we can see all-time highs, but there's also a chance that we don't. But this is the U.S. economy, so we probably will see all-time highs. Um, but on the short term, we're going to see, we could see some pain, as in today. Maybe even tomorrow with the earnings call from that company. Right now, we're in earnings season. You said solid buy. Thanks, man. You said tell them about Netflix. So I miss Netflix. Netflix is a good buy. I would say Netflix too. I miss Netflix. I fell. You can't you can't listen to anything that I say now. Nike, no, no Nike. Microsoft, yes, no Yeezy. Yes, double D's. It depends on the pharmaceutical. Y- No weed. Stay away from weed stocks. Buy the weed, not the stock. That's the way to do it. Buy the weed, not the stock. I charge 1% a month. Yeah, but that's a real set it forget it portfolio. Add on, add on to the good stuff. Even when the good stuff go bad, like when we get the downturns in the market, that's the time to buy. Those are the times to buy. This is why I told you to wait for after the volatility, because right now we're going through it. So right now, you might buy something now, and then SPY drops, 6%, and your stock drops, 20%. Now, you're looking at me crazy, Um, you're always looking at me crazy. So that's why I suggest, just always buying always you always want to buy low, especially when you have a good performing stock. Well, the market is going to do what the market does. You know, there's times when the market is just going to go down. It doesn't mean your stock sucks. It doesn't mean your stock is selling off. It means that the market is just dropping and your stock is a part of the market. You know, it's a part of the S&P, especially if it's a part of the S&P 500, you know, so it's going to pretty much do what SPY is relatively doing, you know. So don't get too worried about that, you know. Um when it comes to like a big sell off, you know, if you can catch that sell off, then if you think your stock is going to get hit, you know, you can sell some, take some of the position off the table, and then, you know, if it's trading at 35 and, you know, we're about to go into an event and you think it's, you know, it can drop down to like 30 or 29 or something like that, well, you know, you can make money on that, you know. You can make good money on that because you can sell right now in the 30s, let it chill for a little bit, and, you know, buying when it's lower. You know, buy a portion, you know, sell a portion. You don't want to sell the whole thing, you know, because you might be wrong. So why be totally wrong when you can be halfway wrong, you know, and you can still, you know, reap some upside on it. But at a certain point, you know, you can also just write covered calls, and a covered call is, you know, better than selling. You know, but covered calls is expensive because you need 100 of the stock. You know, and 100 of the stock is pretty much whatever price you see, move the decimal point over 2 times, and that's how much 100 shares of that stock costs. It's expensive, but when you do that, that's when you start. There's a lot of things you can do. A lot of things you can do. I made videos on those things, and those are the things that bankers do. You know, on my YouTube channel, I teach people how to trade like a banker, like a banker. The reason why I say that is because there's parameters that you go through, and there's certain strategies that you do, and only those strategies. And when you start trading like that, then it's crazy. But it's more expensive. You do need more money when you do something like that, you know. Because I remember when Tesla was trading before the stock split, I had 100 shares of Tesla, and I was fucking trading Tesla. That shit was nasty. I'm sorry, after the first split, man, I wish I would have picked up my fucking 100 shares. I had I had them, but I sold and I went into something else. I went in. No, it's SpaceX. Yeah, SpaceX is public. Yeah, buy SpaceX. Now all those space plays are futuristic plays now. The futuristic plays, you know. So it might take a couple years, but they're doing things. So I'm a big space guy. You know, I'm into astrophysics. You know, like I read those books. You know, okay, I've only read 2 books. I've read one book by Stephen Hawking and one book by Neil deGrasse Tyson. But I do I do intake a lot of content, okay, when it comes to astrophysics. But I say that to say this. There's a new race. There's a new space race going on right now. There's 2 space races going on currently. I don't know I don't know if the public fully knows this or not, but there's 2 going on. One is for data centers. That's one that people that people are some people are, you know, more aware of with the data center play. Number 2 is mining asteroids. You know, we have a lot of comets, a lot of debris. Um about 20 years ago, they intercepted a comet and they landed, you know, around it, and they followed the velocity. It took 10 years. Okay. So this comet takes its orbit is in between Jupiter and Pluto. but it touches around, it comes around Earth. It comes a close point around Earth, and when it hits that closest point to the sun, that's when you start seeing the tail. So that's when they know it starts getting closer. But we don't have the speed that that comet is moving. We don't have that speed yet. So what they had to do is they had to slingshot around Jupiter and then have it come around so it can reach the same velocity of the comet. But for 3 years, this is so awesome. I'm sorry. I love this nerdy stuff. I love it. But for 3 years, they had to put this thing to sleep. They had to put this this thing in space in a hibernation because it wouldn't be able to receive enough of the sun's rays for the components to keep moving. So they had to put it in hibernation mode for 3 years. So that was a big gamble that they had to do within that 10-year period. So it had to survive other asteroids, other debris, moving at 5 times the speed of a freaking bullet. So it did all that, and they finally get close to this comet. Okay, so now the technology is there. All right, this was back in 1994. All right, that's when they started this experiment in the late 80s. All right, so when they finally got to this comet, they found out that the comet wasn't an oblong object such as a potato. It actually looked like a rubber ducky. Okay, a literal big rubber ducky. All right. It was about, I think it was about like it could have been about a mile wide. It could have been about a mile or two wide. All right. But what they had to do was, in order for them to get close to it and maintain the speed. So when it comes to space, okay, everything in space has a weight, but it's invisible, and that's what gravity is, okay? So if you were to get a sheet, think real quick, we're going to do a mind experiment. Think in your mind, put a sheet down on the bed, okay? A big flat sheet, white sheet, all right? Now get marbles, get a marble, get a basketball, um get a soccer ball, okay, and get a bowling ball, okay. Now what I want you to do is the bowling ball, put the bowling ball in the corner of the one bed, and what the bowling ball is going to do, the bowling ball is going to drop down into that sheet, and what that's going to do is that's going to make the area around the bowling ball curve down. Well, that's gravity, and that's what gravity is doing to us in space, and that's how it is space. So I want you to get the different objects and put them on the bed around it. Okay. So even when you get a big piece, a big ball like a basketball, it may be bigger than the bowling ball, but it's not heavy as the bowling ball because that's density. Well, that bowling ball is our sun. Okay. So and now you put the marble down. Now the marble is more affected. It would be more affected with the distance to the bowling ball versus the distance to something big and light like the basketball. That would be like Jupiter. Okay. So when you have something with a smaller mass that's in space, it goes within a gravitational pull, okay? So everything in space has a gravitational pull no matter the size, okay? I say all that to say that, okay? So now this thing that is flying throughout space, this comet, it was called like PH123 or something like that. They had to get really close to it so it can maintain that gravitational pull around that object. Okay. Now, although that object is bigger than that satellite, but the sun is bigger than that object in Jupiter. So that's why it stays within that same distance, that same rotation. It doesn't go out of that because the sun and Jupiter isn't moving it. The Earth can't move it. The Earth is so small, compared to those two. They have a higher control on the different objects. So, I say all to say this, okay? When it comes to investing, these scientists and these big companies, like, they know this stuff. They know that there's things flying around Earth. So, we just found out that water isn't foreign. I'm sorry. Water is foreign to Earth. The water that we have on Earth doesn't come from Earth. It comes from the Kaiser Belt. It comes from comets, okay? And somehow a comet, and comets hold so much water, okay? But you don't know that because when you look at it, it looks like rock. So a piece of comet broke out of rotation because something exploded in the Kaiser Belt, billions of years ago. And when Earth formed, this comet hit Earth and supplied it with water. So technically, this isn't our solar system. Like, we don't come from this solar system. We come from another solar system. But that's a discussion for another day. But that's so big and awesome. That's so big and awesome. But so you have all these companies right now. They're in a space race because when it comes to Earth, we're limited on the different um precious metals that we have. Okay. And things have settled in our solar system so much to where you know we're not getting pelted by these big meters and comets all the time. We get stuff that come into our atmosphere, but then it breaks up and comes down real small. We haven't gotten anything big and substantial you know in a while. So it's not like we're getting new elements added onto Earth. So what these companies are doing is they're trying to get into space and they're trying to mine what's on these planets. Okay? Now, that's also going to tie in with AI because they can create these arms and levers and maybe some type of humanoid that can do things that we can't do uh analog wise on Earth. You know, yeah. So these companies that's going into space and that's actually I'm not talking about exploration like passenger exploration. Now, believe it or not, that's just testing. That's just more testing. They're just making money off of the testing. They're just testing for more stuff. Yeah, they're sending these rockets, sending these millionaires and billionaires into space and everything, and they're paying their millions and their billions so they can go through that experience. But that money is funding for the next phase of whatever that company is doing. That's not the end all be all when it goes to, space exploration or anything of that nature, in my opinion. So I do believe that we are in a really cool period when it comes to like space exploration. I'm a big time fan of space and astrophysics. I I don't study it, but I do pay attention. And they're good reads too. Neil deGrasse Tyson, no, I forgot the name of his book. Stephen Hawking's is a brief history in time, and what's Neil's book? And Neil's book is fun, is easy to read. You know, when it comes to Stephen Hawking's book, I needed a thesaurus, I needed a dictionary. I had to take my time because I had to look up a word, and then sometimes you had to look up a theory, or you had to look up like a problem, like to understand, like not even like to fully understand, but to, like to have an idea So it's not like you're a deer in headlights. You at least have a hoof up. So you can try and move on to the next part so that you can put it all together. But his book isn't too highbrow. But I mean, this is Stephen Hawking we're talking about, and I think I got the abridged version. Um, but it was fun. They were fun reads, good reads. I'm very fascinated with dark holes. Dark holes is definitely my favorite subject when it comes to astrophysics in space. I don't know too much of like the numbers. I'm just learning about the speed of light. I know the laws of speed of light and things like that. You know, and I know like supernovas and magnetrons, pulsars, white dwarfs. You know, yeah, really cool stuff. I think it's cool. I think it's cool. Excuse me. This was a big play. I wish I would have jumped on this move. I'm gonna start taking these smaller moves. I wish I would have took this move. Actually, I just didn't take that move. I honestly, it was just that one. It was just that one. That one was a nice one. But we found some consolidation right here, some breakdown. We're gonna see where we go from here. Is that a new high day? That's a new high day. New high. Yep, that's a new high day. It went from low to high. 1128. Hmm. Yeah, that's pretty much the buy list that I'm going to open up more. I have some SoFi right now. I got a lot of that, a little bit, a lot of that stuff actually already. Nothing crazy. I'm gonna start leaning into it. I wanted to wait until after this event right here. Do you guys have any space fun facts? As you can guess, I have tons of fun facts about space. But one thing I really want to know more of course, I want to know more about some Cinderella planets, because there's a lot of them, a whole lot of them. Ah. Mm. That's such a good word too. Antithesis. Such a good word. Mm. Mm. That makes sense. Wow. Yeah, some scary times right now. AI is not gonna. It's gonna help, but it's not gonna help like that. We wanna some consolidation. Damn, 2 o'clock, man. Make or break. This is going to make or break what's going to happen for the rest of the year. This is going to set the tone. This is going to set the tone. And then I bow, 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 bow. Oh, wow, 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 wow. Bow, 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 bow. You said fun fact. We just got info to at Jeff Bezos and Elon are having a race to build data centers in space. Yeah. So yeah, I knew Elon, and that's why he was appointed on like another like board or something like that too, because he got appointed to that board because of that race. And yeah, so there's a lot going on with that. Oh, let me call my mom. She should be up right now. Wish her happy birthday. Boom, done, just like that. I called. She picked up. I said, "Happy birthday, mom." She said, "Thank you." And then she started talking. I said, "You know what, mom? Today is FOMC day. I gotta go." Click. You know, I did my son duty. I did what I had to do. She told. I called her. I said that, and that was that. And I'm out. I'm not here. No, no, no. I didn't do that. I I didn't do that. That would have been messed up. But no, no, I didn't do that. We're gonna go. We're gonna go out to eat later. Nah, nah, I ain't do that. That would be funny though. That would be funny. I remember uh, when I was younger, when I was a young boy, I, there was probably just one time, honestly, because I was out there, running and gunning. One time, I probably just threw a boatload of money at her for like Mother's Day or like her birthday or something like that. Mm, I don't see me doing that on Mother's Day. I can probably see me doing that for one of her birthdays. I don't know. It's just halfway bad, like who's mad that you just get a boatload of money just now, for your birthday? Like, especially after she's always spoiled on her birthday and Mother's Day anyway. It just this time I was just busy. This is a great point. Great point. I'll update you in a second. Great point. So I'm on a forum right now. Someone said, "How many of you are in some kind of debt, excluding small credit card? I'm just generally curious, not trolling. Like or comment, please." Someone said only student loans, like 20K, but could pay it off whenever. I have 154 in mortgage debt, still owe six on one of the cars. Mm. There's no more dollar menu, is there? Yo, Joe, are you here? Yeah, he's here, but he's not here. Uh, remember when Rump ran on capping credit cards at 10%? Where'd that go? 15% of private credit borrowers aren't generating enough operating profit to cover interest costs, per Goldman Sachs. Ugh. Ugh. Man. Mm, mm. Oh man. Oh, that's so funny. Yo, Trump has been talking big shit about Powell, yo, on the global scale too. He's been going around all these different nations talking, just calling Powell all these names, yo. What if he slapped him in the face today? He say, "Fuck your economy. This economy is messed up. We need to do this and this and this. We need to tighten up." Instant 600. I'll be a millionaire. I shit might fuck around, go to man. I'll be a millionaire. That's fine. Wow. Wow. Oh, man. And we are back. Welcome to Chuck for Options. Today featuring Jerome Powell and the Fed at the FOMC. Well, welcome. I hope you cast your vote, make your play, strap in, because today is going to be more bumpy of a ride than I had on your mom last night. Let's go, baby! FOMC! I may go broke, but not in debt. I fuck with you on that one. I might get fucked up today. Actually, I'm not going to go broke today because I have a hedge. You definitely got to have your hedge, so I'm not even going broke today. I might get hit, but I won't go broke. I'm either getting paid or I'm getting hit. We either getting paid or we getting hit. You're not going broke. You're not going broke. So we don't gotta worry about it. So that's one monkey that's not on our back. We got other monkeys back there. We got a backpack with a, you know, but that's just one of them that's not back there. I don't know, man. People were bringing up some really good points with Powell. People were saying some really good points, having some really good points with Powell, and just the sentiment of what's going on in the market. They say Powell doesn't like uncertainty. There's numbers data we don't even have yet. Everybody is saying, yo, and people are euphoric for the upside. If you had a crystal ball, you can just always put your money in that way that it's going to go. I don't got one. So the safest way to do it is just create a spread, write a call, write a put. If you're extra bullish on your position, do a ratio 2 to 1, 3 to 2, stuff like that. Uh, 0 dates is going to be dirt cheap. Yeah, but dirt cheap is going to turn into what? I'm going to load up like 59. Yeah. Yeah. Yo, I did look. I wasn't going to say it, but that's what I did last time. And I ate. Oh my God, I ate. Because look, especially if you would have ticked them, but it has to be on the first ones though. You gotta sell on the first spikes. Whatever it goes, sell a bunch of them off on that spike, or set a stop loss and set a profit take. Okay, so if you bought them at 3, make sure you sell them at 6. Sell most of them at 6, because it's going to ding at a time when you don't think it's going to ding and you don't see it dinging. You're going to hit those 100% fast, 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 fast. They're going to come fast, fast, fast. So you got to be ahead of the play. Remember, that's ATP. That's ATP. It's the same thing on the sell side. I'm happy I looked up there and I read that. I don't want to I don't want to influence anyone to do anything that they're not ready to do. I don't want to do I don't want to influence anyone to do something that they don't want to do. So that's why I didn't say what you just said. But that's exactly what I did. And I do that, and that's nice. And you got to sell them, sell them, sell them, sell them, sell them. Sell most, have some go. Make the play totally free. Now you got freebies. I remember I reworded it. I didn't tell you how many or anything. I just reworded it. So yeah. So I don't want to influence people to do anything dangerous or anything that I do. If you're getting advice from me, it's the right advice. If you want to ask me what I'm doing, that could be a totally different thing. Totally different thing. But I'm not going to steer someone the wrong way. I don't believe in that. Like, I'm not going to say, "Oh, I'm buying puts and I'm buying calls." Like, no. Like, I'm not. There's sometimes you're going to take a trade. That's not like your long position. That's not your overall position. But sometimes you don't want to catch a falling knife, so you ride the wave. I would think riding the wave would be a lot more, or you don't do anything, you know. But if you do something, I would give that as advice. Don't, you know, I would say don't go for the catching a falling knife. It is just how you think it is. If you get like a comb and drop it, and then try and catch it with your other hand, like 3, 4 feet apart from each other. That's trying to catch a falling knife. If those bristles hit you, that would be like the blade hitting you. You don't want to do that because you don't know when the bottom is happening. You don't, because you might catch it, but that thing gonna keep falling. So I would say if you're gonna make a play, I would say ride the wave because if that thing's gonna keep falling or keep going up, all right, you're in it, you're riding a wave, you're making money, you see the percent going up and everything. And then if you want to take the opposite, but the opposite position is the position you want to take, is cool. So, you can sell that off when you go when you're up from 70% and you go down to 60%. You're like, all right, bet, let me sell that off, let me start buying that because now you're losing value over there. The point is to get in at a good premium. So, you got to think if you're going, you have to be able to go uh, clockwise on one side of your brain and then go counterclockwise on the other side, as I fuck up that whole thing by trying to say it. But, that's what it is. Now, I don't know if we're going to see 1,000 percenters today. I don't know because today is kind of late in the day. I mean, almost anything can happen. That's why I say wait. You definitely wanted to wait for contracts. Um, because this intraday stuff is going to be totally different because we're going to get the minutes at 2, then we're going to get him at 2:30, and then the Q&A, that's when we're going to start seeing more action. The minutes is going to give us a move. Okay, we're going to get a little jut some way. We don't know which way, but we're going to get a jut. You know, 2:30, then we're going to start getting a little bit more motion, a little bit more action. But then during the Q&A, that's when that's when the move is going to be moving, and the groove is going to be grooving. And if you're in one direction, if those things are dying out, sell them, put a stop loss on it. you know Definitely put a stop loss on it. Now, if today is your first day like trading or trading the FOMC, and you want to trade options, open up the option chain. Just open up the option chain, follow certain contracts, almost paper trade it, and just really look at them. Pay attention to the current time, you know, that we're in, and also look at the contract. Look at what happened throughout the day. Look at the time frames, the different price points. Then look at the SPY and contrast to the contract. So that's a big deal too, because now you want to get a visual representation, and then when you get better, then you want to start looking at the different gammas, specifically theta and delta. You know, Believe it or not, stocks also have gammas. Look at the stock gamma. You're going to see that they share the same delta as the closest to date at the money contract. They share the same deltas, same thetas, you know, but then you're going to start seeing a move throughout the day. The whole time frame I was telling you about before, well, that matters. So, options are a living, breathing organism. These things are alive. These option contracts are alive. Just when you think you know something, you find out that you don't. Uh, where's my book? Here we go, right here. Did you guys order the book? I have mine right here. Well, I mean, I had it for years, but uh, the options playbook. Okay. Now online, there's a free version online. Okay. There's a free version, and it's going to give you the whole book. But the physical version is amazing. It's hardback. You can write in it. You can put post-it notes in it. There's just a lot of good ideas. This is going to teach you a lot about option contracts. So this is a great place. And on top of that, too, Brian Overby, he has a podcast called The Options Playbook. Yeah. So, and even if you trade futures, they even do futures. All right. He still works with the CBOE. That's the Chicago board. Um, uh, uh, and his co-host also, I believe he is an active market maker. So, I mean, you get so much information listening to those guys. They have a podcast every day, for the past like 20 something years. They're awesome, very educational. Uh, so if you like that kind of thing, then definitely. The book is cheap. The book is cheap. Um, I think it's like under like $50, but it's worth it. It's definitely worth it. I'm looking through it now. It's very little literature. There's a lot of literature, but then they also do show you a lot of plays. A long call spread, a collar, protective put. A collar is when you own the stock, but you buy a put at a strike, then you sell a call. Buy a put, sell a call. Okay. Oh, that's easy. Is this a cover call? Okay, but you want them to go a certain way. All right. So you have all these different. I don't really write collars. I used to, but it's awesome. The options playbook is really good. Really, 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 really extremely good. Highly recommend it. And I have some longer dated Nvidia plays too. Lots of manipulation. Powell is pissed at Trump. I know he is. I know he is. Trump's been talking big shit on him. I said Trump's been talking big shit about Powell on the global scale. Plus, he's leaving soon. This could be his last FOMC. Man, oh man. So that could be nasty, but I do have some protective calls, so I do got protection. So if my shit to the downside, I'm looking to the downside, but I do have looks to the upside. Like I still have my call. Uh I got it here. I didn't get it here. I got it here. So I still got my call. I'm not getting rid of it. I'm gonna probably try and leverage it out a little bit more because I'm definitely tilted towards puts. Definitely tilted towards puts, but I'm not going to be ignorant that I can be wrong. I'm not going to be an ignoramus, dude. Marvel Rivals uh has an update on the 12th. We're getting Rogue, and she's crazy. And on the 12th, Path of Exile 2 drops new update. Oh wow, they did the same thing last year too. What the? So what I was able to do last year was I was able to play. I was able to play Rivals because they released early, and then just as Path dropped, well, I wasn't able to get into the server, so I played Rivals until Path dropped, and then when Path dropped, I logged into Path. So that was hot. Whoa, this is a new high day. Yeah, we're gonna let that do what it does. All right. So what can this mean? This could mean they're burning the bears. Last time we seen something like that, but this is much stronger than this. They brought it right down after that. This wasn't as strong. This is looking like a leg. Uh, That's definitely a leg. It broke out. All right. So last year, I'm sorry, last FOMC, uh my grade to myself, the thing I said to myself was, wait until 2 o'clock, 2:30. That's a good time to really start if you're gonna play into that, because there's different phases. I really didn't understand that too much, but on FOMC days, different phases. The market was scared. The past few days we didn't go anywhere. The past week, maybe even 2 weeks. Rejection. Uh, Oh, look at Nvidia. What's going on with Nvidia? Now I'm long Nvidia now. Ugh. Holy shit. They're calling for Nvidia 165. The fuck? I love the max heavy manipulation. Sacrifice Nvidia to pump Apple. Easy. Ooh, what is Kramer saying? Mm. Time motherfucking Lee. Nvidia filed for bankruptcy by today. Shit, do you not know the fuck? They got too much money though. They got too much money. But oh my god, dude, there's only a couple countries that have more money than Nvidia outside of the U.S. That's like Russia and China and like one other country. Like Nvidia has more money than like England, Australia, maybe not Dubai. They're probably not fucking with the Saudis. I don't see them fucking with the Saudis too much. And they should have waited. So there's three big data points we're not getting leading into today. Wow, those calls are crazy. I'm happy I picked them up. Yeah, that's kind of hot. I'll take that. I'm listening to Tom Lee right now. Yeah, I thought that was weird. So after the past couple FOMCs, I was like, yo, I should only trade like FOMCs and just like wait. Just stack up all my bread until the next FOMC and just 25 times that shit every time. Boom, 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 boom. It's good. Be the one that start a new relationship with you and what you do. Make me, make me wanna be the one that start a new relationship. Make my make me, you make me. Is there anything in between us? You was like my best friend. The one used to run and talk to when me and my girl was having problems. I used to say it'd be okay, suggest some nice things I should do. And lay my head down and listen, think about you, and then make me wanna be the one. And what was bad, it should have been it, and then it should have been you. And I said, thought about you. What I do, child. And tell my baby bye bye. And I inside my mind. I don't this thing, but I really need to get it together. That whole album is fire. That whole album is fire. All right, let's get back to it. I'm gonna start paying attention again. What's going on? Um, let's lower this, and then we're gonna put you there. We want you there. All right, so I'm gonna pull up a couple people soon. I'm gonna go through different chats because I want to hear what everyone has to say. Uh, this is Kevin and what's this guy's name? Tomley.
Ethereum.
Wait, ISM going into expansion
Here we
territory
go.
is positive for Bitcoin and
Correct.
for all, interesting.
Yeah, and so if you look at ISM and Bitcoin, and you detrend Bitcoin, essentially look
Fraudly.
at its distance from the 200-day, it's almost perfectly correlated to the ISM.
Surprising.
And
but
same thing with copper to gold prices. So copper's an industrial metal versus gold is a
right, but all of that tells you that it's basically just risk on, that they're all behaving like an economy. And is that
Why are they so bullish?
I think that's right. I think Bitcoin's a bit of a chameleon because there'll probably be a time when it acts like gold, but right now it acts a lot more like it's sensitive to monetary policy and the business cycle, and both are about to turn up. So that would mean anybody who thinks the Bitcoin 4-year cycle means crypto prices are down next year, we're betting against that thinking that new highs come early.
That's
like
fascinating.
January.
As a final word, we're about to talk to Jason Furmanberry, who says the Fed should not be cutting because of inflation. And I'm just curious what your response would be to that.
That the rate did not trigger the 2021-22 inflation. The Fed cut the policy rate from 1.5 to 0.
So it's worth noting what he's basically saying is, as we get back, I mean, aligning ISM inflections to 50 makes logical sense because it means you're going from a period of a slowdown or recessionary period into an expansionary territory or expansionary environment. Of course, risk assets go up in an expansionary territory. So the fact that like ISM's going above 50 aligns with Bitcoin, of course, that has historically happened since 2008. That makes absolute sense. And it's not necessarily indicative, though, that we will have a bullish upcycle in the business cycle. What if we have a down cycle, right?
Yeah. There's a lot of things tethered to Bitcoin right now. And that's not the purpose of Bitcoin. I can't wait till my other guy come on. This is me, Kevin. Uh, mm. If they don't cut rates today, oh my God. The market is going to tank. Tank if he doesn't cut rates today. Bro. Huh. Oh, Uber's down 6%. How about all that in margin on the hood, though? I want to imagine. Oh wow, those calls did a little bit better than what I thought they did. Sheesh. Alrighty. Didn't see that. Sheesh. That's what's up. That's what's up. Nice call. My sell time was 12:55. 12:55 was the high of day, right? Yeah. Yeah, 12:57. A new higher day. I should have sold them right there. I should have sold them just to get out of them. I would have taken some good premium. Well, I lost that opportunity. New high day. Boom. Yeah. I gotta keep him now. I really gotta keep him now. Shit. Ah! Believe it or not, I'm still in profit on those options, on those contracts. Like I bought them at like a good range. I bought them at the bottom range. I bottom ticked them. Like like they were strong, but that was my bet. They were at their highest right there. I should have sold them right there. That's my sell point. I forgot what I was doing. I was preoccupied though, but that's my fault. But that's my leverage anyway, or that's my insurance. So I now, at least now I know what my insurance is looking like. You know. So now, as we make this move, if I feel as though we're gonna need that insurance, then now I have an outlier. Yeah, I'm still up on him. That's fucking crazy. That's fucking insane. That's insane. I'm still up on those calls. That's sick. That's sick. Uh, I really like my positioning. I really like my positioning. I really like where I'm at. Like a lot, a lot, a lot, a lot, a lot, a lot, a lot. Let's get it. Let's get it. We are looking good. 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 Oh, 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 oh. Oh, 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 oh. All right, so if we actually do hit this new low a day, I will have some decisions. Like I miss my calls, but my calls are insurance. It just so happened, I got my insurance at at the right time when I was supposed to. Because even though I'm bearish for today for the FOMC, like I still, like the fuck. How can I give you the whole falling knife analogy and I don't ride the wave? Instead of me catching the knife, I riding the wave. I just forgot to get off. I just forgot to get off the wave. But that's my insurance. That's not like a play. I don't want to sell my insurance too late. I mean too early. I made a little bit of money off of it, but now shit go the opposite way. But I sold my insurance for way too cheap. At least now in this play, if we break the bottom, okay. So I got my calls back here. Not even right there. I'm about to say, how am I that low now? Yeah, I got my calls back here. So even if we do, so right now, if we do break down here, I might let off. I might sell some stuff. I might sell some stuff. I missed out on my calls, but my calls are insurance, so I really don't care about too much. But I wouldn't mind lightening the load a little bit. Because look at these ranges. Every time we hit a new high, we break the new high of the day, a low. We we haven't breaking any. We haven't breaking this low yet. So that's a little bit to drop. They can't even hide the theta. That's crazy. I'm still up on this call. That's crazy. That's crazy. I'm just about to go neutral on the other one. I guess I might go negative at 682.50 on those, but I want to keep them. I'm not worried about that. Even right now, my puts are killing right now. You know, and the reason why we're seeing is because theta. With these swings, these are big wide strokes, and with these big wide strokes, this is keeping that theta alive. You know, think of it like water. Okay, like in a bathtub. Okay, you have a bathtub of I guess you can use it either way. Really cold water, okay? Now coming out of the spigot is hot water. Well, that's theta. If you don't let that hot water come, that's the movement of the contracts, okay? And you wave that water around with your hand. You know how you're in the bathtub and you want to get that water around? Well, you want to mix it so it can go neutral, okay? You want to get from hot to cold. Well, that's the option flow. That's how the options going from negative to positive with the calls and puts. You know, so think about it on the other days when we had small ranges. This is why you got to look at the contract so you can understand what I'm saying, or else I'm speaking Greek. Think about the days it was little volume and we weren't moving like this, you know? It was cold, you know? We didn't have any hot water coming out. The hot water is the volatility. Now we got volatility coming out. Now we got the hot water coming out. Now we're able to fan that water around so we can get that water mixed in really well. You know, you just look at the contracts, honestly. They suck. I got some new SoFis. Those new SoFis aren't doing too well. But I mean, they're further out. They're for like I think like January or some shit. Late December, January. Oh, we got about 30 minutes. Oh, I just strained my neck. Ooh. Hawkish cut with no commitment. What the fuck? That would be crazy. Hawkish cut with no commitment? That's Max Payne. That's Max Payne. That's Max Payne. Yes, we will hear pause a lot. If we hear the word pause a whole lot, pause isn't good. Right now, Kevin is doing a bingo sheet for what he's going to say. Honestly, we had a we had some good data come out, and we had bad data one time that translates to good data towards rate cuts. But outside of that, all those missed reports during the government shutdown, when they've been coming out, they've been positive. You don't need a rate cut with positive news. Oh, I gotta get a massage. Yeah, but everyone thinks it's going to be bullish. Everyone thinks the rate cut's going to be bullish. I'm dumping my pumps and pumping my dumps. I like that. I'm dumping my pumps and pumping my dumps. Wow. That is good. You know what? And that's, I'm happy I turned you down before. Remember when I said you were loud? You said nerd. No, 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 no. Yeah, yeah, well, yeah, you yelled it. Yeah, you just you did. Well, it got loud. Well, anyway. Oh God. Um, you said nerd. That's funny. You just painted a whole room. Wow, nice. Still trading. Today's a all day trading day. Today's a all day trading day. Well, well, not until like five, like four, maybe like five. Bro, you wouldn't even believe me if I tell you if this thing even works out halfway to where I want it to work out. Racks. We talking racks. Racks. Like laughing. There's been a couple times I laughed to the bank. You ever laugh to the bank? Yeah, yeah, yeah. Laughing to the bank type shit. I've laughed to the bank a few times in my life, and god damn. All right, all right, all right, all right. What game you playing? Yeah, man. Hmm. Beta. Is like is like Path of Exile too. Like under development, but it's out. That shit ripped. Fuck. They went up a whole lot. Yeah, you right. You right about that. Nvidia is catching a bid. Nvidia is catching a bid. I have a phone call. 1 second. All right, here we go. What? Look at. Oh, that's Avgo. I'm like, what the fuck? This is Avgo. Avgo has earnings. No, I don't want Avgo. Okay, here we go. I was like, what is going on with Nvidia? Alright. Alright, there we go. Metrics are better. Alright, we have a divergence right now with Nvidia and SPY. Okay. Whoa, they get expensive next week. This isn't too bad. This isn't too bad right here. Those aren't bad. Yeah, SpaceX isn't public. They're going to be public next year. I thought so. That makes sense. A lot of people follow Burry's trades, so they're trying to squeeze them out. That's nasty. But there's a lot of manipulation too. All right, these puts are starting to put. Well, they were already putting. Ouch. Mm, no, N- next year. Yeah, next year. Yeah, next year. $81.45 is our low of day. 81.45. All right. 3 minutes. 3 minutes. All right, minutes about to drop. Let's check out our MACDs. All right. Good luck. Ding ding. Just loaded 50 significant calls to the moon. We go. 687 calls. Whoa. Good luck. Not 687 calls for today. All right, there we go. Yeah, those calls were not going down at all. All right, here we go. All right, you see? At 2 o'clock. All right, that's the first move. We got many more moves. That's 2 cuts for next year. Here, let me turn this on.
Timing, additional policy, okay, extent and timing to describe its additional adjustments. I don't really know what that means. Judges, downside risks to employment have risen. Future reserve management purchases likely significantly reduced. Fine. Okay. GDP growth of 2.3 versus 1.8 in September. That's high. I was nervous about that. It's good for the economy, but that's a big move up. 2.3, man, that's a big move up. PCE, they reduced. Yes, that's good. That's good. They reduced their expectation for inflation. Unemployment, 4.4 at the end of 2026. That's bullish. That's good. That's bullish. It's bullish. You don't want to see a big spike in the unemployment rate. Okay. Implied 25 basis points of cut in 2026. Longer run view, 3% rate. Fine. That's interesting. It's been 3%. Median view of the Fed's funds rate 3.1, so that's good. I've got vote in favor was 9-3 with Myron preferring a 50 basis point cut and Goolsby and Schmid preferring no cut. So this was a 9-3 cut. I'll write that down really quickly. Fed
plus
cuts
or minus 40
25 BP with 9-3 vote.
A move up to about 68.90s. We don't see that yet, and of course we're not close to 68.10.
Schmid and Goolsby. Schmid and Goolsby wanted no cut. Bump it. Okay. Then I've got ends operational limit on overnight standing repo. Pace of future reserve management significantly reduced. Treasury bill buying to be elevated for the next few months. There's Tomo. That's Tomo.
Patience is the key on FOMC time.
Okay. Hold on. Elevated 3 minutes. Fed first reserve management purchase operation to be 40 billion in treasury bills. There it is. Tomo. Bill buying to be elevated for the next few months. Attentive to risks on both sides of the dual mandate. Judges that downside risks to employment have risen. Uncertainty remains elevated. Okay. Expanding at a moderate pace. Job gains have slowed. Unemployment rate has edged up. Okay, that covers all of it. Let's actually get the statement now. And overall, so far, so good. It's not like a big run
Conveniently over on Thinkorswim. How's Bitcoin doing? Let's go to a 5-minute chart.
It's not
get back down to a smaller time frame.
So far, this is not
Bitcoin
dovish.
clearly with the
So it's
reversal
not
as well
the
off the
3%
highs.
so far.
So you're not really seeing a sustained
but we're gonna look
rally
at
out of
this SEP because this is what we wrote on the SEP. I actually said bump here. I looked at 2%. They went to 2.3%. And they kept the unemployment rate stable, but they kept that. Dude, I said 3.1 and they went 3.1. Let's go, dude. Let's go. That price is in the 2 cuts. That's exactly what we wrote down. Okay, perfect. So let's go look. The one thing that's a problem is pumping that GDP up that high is a little
BTC.
hawkish.
Let's maybe check the ETH.
So
The ETH.
because it basically says, why do we need
Ethereum
a
I'll be right back. Give me one sec.
Your intraday
doing so
trend in the
well.
upward direction,
We're
but it is
so far
unwinding some of that
away
initial push
from
in the upward direction. How about the VIX?
you know, a recession if they're pumping
VIX
this up.
collapsing makes sense as we
So
are getting
that is
a
the
crush.
hawkish part of this. So now we have to
in
deal with
the-
the hawkish part. The
Remember,
FOMC
folks,
SEP December 2025.
After the trap has money,
Okay.
all right?
Apologies, it's one of those
the
days.
hawkish part right here.
As the one-day VIX also gets crushed here,
Shout out
right?
to
Just
the
telling you
retail
that those
side.
zero-dated
Okay.
options,
Month.
all the hedges are coming off. Anybody who bought a bunch of puts
Okay,
and
this
was
is
like,
the
oh my
hawkish
god, I
part
need
right
to
here.
insure
See right
myself
here?
against the Fed
I
rug pull, the market's going to go to
predicted
zero.
two.
This is
So
So
insurance
let's make this
via puts.
green.
Those premiums
so
are
we
getting
have that
crushed
ready for next
now that the
time.
news is
And let's drop
officially
that
out.
to like 10. Okay. So
Okay, that's the VIX one
I
day.
put 2
Let's get
here.
back on over to some risk assets. Not really a risk
And
asset,
this
but
is
I would like to see what's going on with
definitely more
notes.
hawkish than that. That is hawkish.
Moving the
Okay.
upward direction
So
here,
they hawk.
which of course
The
is
candle
a
will
lowering
change the
of the
color.
10-year. Let's go maybe to the TNX.
This is also hawk. This
All right,
is
I'm back.
10-year
it's
backing
stable.
off
This stable
on this information. So,
which is
you
somewhat
know, I think
hawkish.
it's generally speaking exactly what the market was
actually
looking for
see
as of right
the
now, and I think that the
unemployment rate
commentary from
coming
Powell will really
down
light the way
next
for the
year.
next steps.
Ah, crap.
What else is
That's
maybe a risk
hawkish.
asset? We've been using Upstart recently
Down
as a gauge
unemployment is hawkish, ironically,
for what's
more
going on
cuts, right? It's like
with
bullish
rates
the
and
economy.
such, and the reason
But
the logic
that's
being right
hawkish.
is once the Fed
I've
U-turn really
got,
started to get priced back in, that's where this
the
started to lift
alignment
out
on
of the
rates,
Upstart chart.
you
So
could see
the
the
fact that
dissension
Upstart
that
is
Nick
sideways
T
to
is
higher
talking
here and
about
still maintaining
here,
some of the gain
because we ended
from
up
its
here.
intraday action,
This is what we predict.
right? This grind in the upward direction just tells you that the market leans a little bit more risk
Okay,
on.
I'm a
I
little
mean, you could
confused
go
by
and
that.
look at
We'll have
something
to
like
look
an
at that
open
in just a
door
second. But 3,
as
4
well.
for 26. That's not what it said.
Intraday
here, is it?
open getting a little bit
End
lift
of
here,
2026.
as well as
Oh,
really
yeah,
on the
3,
daily
4,
chart.
then 3, 1, 3, 1.
I mean,
Wait
this
a
was like the
second.
madness,
If that
nonsense,
stays
madness.
at 3,
Madness,
4,
nonsense.
How is there
This is the
any
nonsense,
more of a cut here?
you know, crazy
So,
liquidity, end of
this-
July, really
this
early
does- this is
September, right? You've
hawkish.
really just built out a base here, and in a
where's
very weird way, a
our
lot of these names,
2026
and
cutting?
you can talk to a number of the
I
people
don't
who
see
trade these
cutting in
things
here.
religiously, like the big
Let me
parabolic
look
movers.
at this one.
This is not a capitulation
So-
top. This is not characteristic of a, oh my goodness, this is going to start going to zero
Because
real
we
quick.
got our
Volume
25
automatically.
cut.
What you would
We just
typically see
cut
there is,
to
oh, I don't know,
basically
let's
that
just maybe go to a
3.6 level.
GME,
I mean,
for
there's like
example.
one cut in there, right? Because right now
Let's go out to a multi-year.
we sit at. Let's drop this in here.
You know, your
We're
capitulation top looks like this.
3.5 to 3.7.
That's when you know it's like dead and gone and never coming back.
So 3.6.
So this
is
open sideways
where we sit.
consolidation is kind of interesting.
Is where we are. Okay, yeah. So that's
Anyways,
36,
all we're
that's
doing
in
here is just sort of
alignment,
gauging
that's
risk on, risk off.
fine.
And as
Okay,
of
so
right
you've
now,
got
the
one
market still
cut in
seems to
there.
be
One
firing
cut
risk
for
on.
26.
Let's
Market
go back to
wanted
the
2.
ES and let's
One
maybe get
cut
this
for
back to an intraday
2026,
chart.
Market wanted 2.
A little bit of a
So that's
sustained
a little
pushback in the
hawkish.
upward direction, maintaining
Little
some of the gain.
hawkish.
So, you know, again, risk on
And
seems to
then
be the
that's
nature of
gonna-
the move
that
so
kinda
far.
kills the
Let's jump on
January
into some
cut,
paperwork.
Unfortunately.
Let's get into some paperwork and see what's going
Okay.
on over there. I know it might be the
Inflation
slightly more
coming
boring
down.
stage for some folks,
We
but we'll
were
get Powell
looking
beamed into the
at
office when the time is right. Just give you a little heads
That
up.
moving
We do have a
up
nice
to
bingo board
2.7, they moved
for
that
the
down,
FOMC today,
which is
so we'll see how
actually
Powell reacts to
good,
that.
but it's also,
And of course, we'll pipe him in
that's
when the
actually
audio is
dovish.
appropriate. But for now, let's jump over to the
Inflation
paperwork.
is dovish.
And
That's good.
oh, look at that! How
So
how
a little bit of a mixed
irritating.
bag here.
Okay.
Let's see what the ranges
It actually
were on
probably
the
is
dots.
not going to be
So
useful.
the ranges are over here on the
No,
far
no, no.
right.
Let's see.
The
Let me see if I
range
can
is
do this
always
real quick.
interesting because you could look
Hang tight.
at the GDP
Hang tight.
range.
Let's try to go.
and
Right now they're going
a
crazy,
new.
okay, folks?
They've basically
Then we
removed
don't care.
recession.
Let's grab.
Yeah.
Look at this.
Where is it?
The
Breaking
person who
out,
was
folks, okay, they're
bearish.
breaking out.
There we go.
Yeah, that's September.
And I don't know. Let's just
yeah.
go.
Look at this right here. For
Transform.
2026,
Fit to screen.
the low end forecaster
That's
revised
not
up.
bad.
The bear revised up. The recession
Not too bad. Do a little something like
or
that.
slow growth bear revised up.
All right. That'll work.
Think about
That'll
that
work
for
for
a
now.
moment.
We're
Does that
looking at
make
some
sense,
paperwork.
right?
So what does
So
this
the
mean?
lo-
What
you
are
had
we looking
somebody
at? This is
who's
the
like,
Fed
oh,
statement
GDP
tracker.
might only
So
be
when the Fed
1.5%
releases
next
their
year.
statement,
No.
this is just a comparison
It got
tool. We can see what
revised
changes.
up.
So instead of
Okay.
saying but remained
That's-
low
oh, that's
through August,
hawkish.
they're saying
Okay,
has
all
edged
right.
up, and that is unemployment.
So let's write that down.
Unemployment has edged
revised
up through September.
That's
More recent
hawkish.
indicators consistent with these developments. That's
I've
their
got
private stuff.
the
In terms of like
unemployment
ADP
rate
and regional stuff. stuff from the Fed
Also,
banks.
revised.
And considering the extent of the timing, they've added that.
No, I mean,
Committee
you didn't
decided
get
it's
the
old
here.
news here. So what we really care about Jerome Powell
Inflation,
acknowledging today
nothing really
is
changed here other
QE.
than it went
Right?
down a little
We've
bit.
turned off the
So
QT
that's
vacuum, so to
fine.
speak. That's this comment strike through right here. And ultimately, it's not that we've turned on the money printer in a big way yet, at least not in an obvious way. But does Jerome Powell have to acknowledge this in today's session? That is going to be a big watch.
Let's go look at the actual
And
dots.
we'll see where we sort of land relative to
So,
liquidity
you're pretty tight.
in the system. Are we going to pump it back in? Is the
So,
balance
here
sheet
you
really
go.
going to grow
These
at a
are the
rapid
actual
pace,
dots,
or are they just going to try to
basically
maintain
showing
it
we're
and
getting
go
to
sideways
neutral,
on that?
right?
So down here is
getting
where
to
you can
they
start
wanna
to see the
getting to
the
where they
dissents.
want to
That's this
be.
paragraph down here. You can see voting against
And,
this action. I know my highlight green on green isn't all that helpful, but right
looks like
here,
everyone
starting right where my
wants
little
to settle
rectangle
around
is,
3%,
voting against this action was
which
Mirren
says
for,
we
as we
have,
talked about, a double cut
1 to
jumbo
2
half percentage point.
cuts.
Goolsby and Schmid
You know,
are
we
the
have 2
hawks in
cuts
the
to
room,
go.
preferring no
2
change to the
cuts
target
to go,
range,
only one
which is just kind of
for
funny because you had some other
2026.
Fed speakers who apparently voted
Built
on
in.
the quarter basis point cut, who were previously talking about, we're not sure, maybe inflation, maybe this, maybe
Okay.
that, right? So that's the bottom vote, but this is also new here. The committee judges that reserve balances have declined to ample levels and will initiate purchases of shorter-term Treasury securities as needed to maintain an ample supply of
Getting some,
reserves. Is
spammers in
the
the
word?
comments here.
What
Let's
do we have
listen
here?
to
Right now,
Microphone,
I'm
and
thinking
I'm
Ample
about
supply
loading more
of
of these calls.
reserves on an ongoing
Just when I was
basis.
about to
So
load
expect
on more.
ongoing
It's still pretty
QE
hawkish long-term
easing
because
in some extent
it
to
seems
keep
to
the
me that
balance
this is
sheet
right. They've upped
growing
their
with the
estimate
size
GDP
of
growth
financial
next year by a
industry,
lot.
so to
We've
speak.
got
That's what
all these
Jerome
income
Powell
tax
will probably
refunds
say
that are gonna
intraday.
kick in the first
But that is what we
blah,
got.
blah, blah. Okay, good.
So that is
Yeah,
the
so
strike
Now
through
we gotta-
version
now
of
we
the
gotta wait for
document here,
Powell.
Going for
and we can see once
627.
again this is
All right,
probably
so-
a tension point
So
to call out.
we
got
made
Bitcoin
some money
now
Especially
around
inside of the
everywhere.
Fed for those who
got
are super
Bitcoin's
hawkish
pretty stable.
and preferred no
I've got
change
DoorDash
policy here versus
starting
those
to
who are super
rise.
dovish
Those
and want
calls
rates to go to zero,
that
aka
God,
Mr.
if you
Mirren's
bought those
Circles
calls,
are
those
rising.
calls,
Let's take a peek over at the updated SEP, and that's going to be
Half
available if I
rising.
can just a
Netflix
refresh, I hope.
I hope
There we
you
go.
manage them
Let's go to
because
the
they
PDF,
were nice.
Dizzle's
and let's see what
coming
we
up.
get. So this is where we've got to start doing a little bit of forensic digging,
Wow.
just to kind of see what's happening with the way that
okay.
the Fed is
All right,
thinking
very
about
well.
things as we
So,
walk forward.
Let's go.
All right.
Yeah,
So just to
DoorDash,
keep in
let's go
mind and
watch.
update anybody
Okay,
who's maybe not as
so-
familiar with this document, please understand that this is the previous document's read, the September projections, right?
Let's go
And
into
we're comparing to that bottom number. So
here again.
this is what I find
Okay.
firstly interesting, that
So,
the Fed did not
the big
continue
thing
to
now,
lower
we have the summary of economic projections.
the expectation
What
for rates
we need to see
into
is
2026, keeping it
Powell's
unchanged, no
guidance
change
on
at all
potentially a pause.
through the Fed funds
That's a risk
here,
factor.
which is pretty interesting
So,
because as we know,
let's
what's the
consider
tension
that.
point beside
Powell,
that? Well, Powell's term expires
Powell
in May,
potentially
right,
to
May
signal a
of
pause
26.
here. Because if
and
he
we've seen
signals
all
a
over the internet.
pause, it basically gives them the
Sorry,
latitude.
hang on, folks, 1 second.
Gives them the
Dying over here.
latitude to wait for data, right? So we get our cut, but this leans.
We've seen all over the
hawkish,
internet
right?
that Hassett
They-
is a front
This
runner.
is positive for the economy.
Hassett, the front runner. And
But leans
there goes
hawkish.
the voice.
Let's write that down over here. So we all have that
Hang
data
tight.
in the actual app. And let's throw in where we're leaning here in terms of the odds. Obviously, we're not getting dove.
Okay.
I'm going to write down this 25 BP cut. We've got the
Fed approved the third rate cut
9-3 vote.
this year.
Myron wanted 50.
Market is thinking it's too slow.
Schmid and
That's all right.
Goolsby wanted 0. And then what this really says, this
All right,
SEP
we're back.
says
We're doing all right.
economy is fine.
I hope.
Okay, economy is
Yeah, I
growing
got the honey
again.
on the desk.
Already, man. Look
Maybe
at
it's
this.
not as helpful as
Economy
I
is
thought.
fine.
Gotta try
Economy
to
back
slow
to
it
growth.
down a little bit.
More growth next
Well,
year.
I have to just go back to the charts,
Economy,
if I'm
more
being honest
growth
with you.
in 2026.
You can see here the
It
point I'm
sort of
trying to make
probably
is that GDP
probably
revised up.
incorporates
GDP
tax
got revised
cuts,
up.
fiscal
Unemployment rate
spending,
stays the same.
and
Of course,
lower
they'll never
rates,
bump that one up.
right? Maybe more
PCE
borrowing,
inflation gets
maybe more
revised down,
borrowing,
and no
more
change to the Fed
AI.
funds rate.
It incorporates
What this tells me
stable
is
unemployment
that they're probably expecting
and
the unemployment
falling
rate to move
pricing.
higher. They just
Well,
don't want to say
falling
it.
inflation, which isn't falling
They're
prices,
probably
because
looking
that's
at a,
falling inflation.
I don't know,
So,
4.5,
overall,
4.6 as being something that's
like,
achievable
it's
in
hawkish,
2026
but
based on
it's
some of the
bullish on the
damage that's been
economy,
done
right?
and
So,
whether or not that will hold.
hawkish
All right.
statement, but it's
So
bullish.
I'm going to try
the
to stop
economy.
talking so much about the SEP
You know,
document,
even your,
and we'll go
even
over
your
to our
recession
I think the best place to look is actually what we do have to check in on is the
forecaster
dot plot.
revised up.
Wow,
to 2%
really wide
GDP
range of
growth.
outcomes in the dot plot
I should
here
say recession
for
forecaster.
26.
I should say
Look how thin
your,
this dot plot is. Thin here.
Slower growth.
Really thin. It's
forecaster
just showing us a
revised up.
lack of
We
consensus.
saw that in the
Nobody
revision
really
over
knows
here in the 2026
where or has
range.
a good grounding as to
So,
where we should be
This is good.
for 2026.
This is
you know,
broadly pretty good. Let's listen to
if
Steve
the
for a
market was
moment.
going to be more confident,
about this
it
balance
should
sheet
really look like a
expectation,
clustering
and it was for
at a certain point.
purchases to
something
begin
along these
again
lines.
in April. So this is quite a bit earlier.
Wow.
And for purchases to average just about 28
Slowing
or
it down a
30
little bit.
billion. So this
So
is more
dot
than
plot
that.
drawn out and
On
thin.
that front for sure. I would
Divisions
also
inside the
point out
Fed.
that when I'm
This
looking
has to
at
be super
the
Dovniran.
immediate
Has to be.
reaction of the
I have
market,
no idea who else
it's
that
a
would be.
little bit more dovish in terms of that next rate cut.
And
We had
you know
it
what?
more
So like,
fully
what's
priced
the
in for
actionable
June
takeaway here?
before the statement
Just
came out,
shows you that
and
you
now
should
it's
continue
about
to
a
expect some
57,
dissents at the
58%
Fed
probability
meetings.
for April. That's
I
gonna
think
bounce
it would be
around.
very, very
And all
telling
of that
if we
said,
started
this
to get
entire
the
discussion
actual
I would
government
point out
data
would go out the window.
on
Next
inflation
week,
as
when we
well
get
as labor,
October and November
and then this
unemployment
started to
numbers,
tighten up and
as
look
well as
something
some
like this.
inflation numbers, and we'll
Because the
figure
Fed
out
could then
if the
start
Fed made the
modeling,
right call
okay,
here,
you know,
whether or not
if
the
we believe we're on a
forecasters
course
were
Good shit,
to
yeah.
get inflation, which is currently at
we'll
X,
throw it away next
over to
week
Y,
when we get the actual data.
we can do
right?
that with rates
an
at
excellent
this
point.
point.
Yeah, somebody
Okay.
writes a recession was
So
the biggest
that would
risk,
be
therefore Fed is
a
bullish.
big tell,
yes,
in my view.
yes, I
Let's
mean,
scroll
I agree
down
with
because
that.
what I care about next
so,
is
like,
this segment of the
the
document
Fed's
here. Let's
basically
go
saying-
all this stuff.
Yeah,
and
Fed
where is
says,
it?
Fed saying,
Okay.
with
Risks to the
employment
unemployment rate,
stable,
dotted line in the
we
prior,
don't see
September.
recession.
You can see here that
that is
the
bullish GDP.
risks have moved back
That's
over to broadly
bullish
balanced
GDP.
instead of elevated
It's
over here on the
selfishly,
labor
Shit,
side
too.
mandate.
bullish.
And if we scroll
house
down,
hack / reinvest.
looks like inflation
IPO,
risks
it's bullish.
are
AI.
continuing.
It's
Oh wow!
bullish.
Hang on a second.
Songs.
Someone
It's
thinks
just
they're
bullish
weighted to the
everything, right?
downside.
Like recession
this is classic.
is painful.
This is
Nobody
classic.
wants
This
that.
is the Fed saying we have no idea.
Recession
We're flying in the
equals
dark.
long phase
That's
of job
what this tells
loss.
me. This document right here.
AI rejecting new
Just
hiring.
crazy.
Basically.
Some people think it's weighted to the
It's,
downside.
you know,
Inflation.
a generation of
So,
pain is not good.
Interesting on that
right?
front.
So overall, this is a
Lower
good
rates,
statement.
perhaps, but not all that
the
low.
Key risk
A
factor
hawkish cut.
would be
I think this
a cliff.
aligns with a hawkish cut.
Key risk
right?
factor is some.
So let me get
form
away
of
from this
labor
document. Let's go
cliff,
back
What do
over
you
the
mean?
price action,
which
which
is
I'm sure
usually
you guys want to
evidenced
see anyways. Here we
by
go.
layoffs skyrocketing.
And where we left off.
Or
No,
higher
this one.
stalling
We've got ourselves
completely.
ES futures,
However,
mostly sideways. Powell will start
October
speaking in
JOLTS
15
report,
minutes. We've got 15
indicated
minutes to kill
higher,
ahead of Powell.
than expected
Starting to
job openings.
tell us what the Fed's
is
thinking
it
behind closed
possible
doors.
That JOLTS report
What?
is
have some
just
more honey
showing
here. Hopefully
seasonal
soothe this
hiring.
throat a little bit.
Maybe. You know, I mean, maybe we could look at
That's
it.
what you
Powell
said,
has
yeah.
The
JOLTS
problem is the tea's so
report.
I
darn
remember you
hot.
told me that.
That's
Burns.
kind
Just
of
made a brand new one.
interesting.
So it's confirmed.
All right, ES
So
futures
if I
still
jump
staying high and tight. Remember that
What
we have plus
happened?
or minus 40. If we go over to the SPX, I'll just do it again.
Job openings.
So we've already moved some
Job
chunk of that, and now it
openings.
looks like the market's pricing in about
You said
30,
he what?
30 points on
So
the
this was
S&P
JOLTS
for our
yesterday.
S&P commentary, Jerome Powell
7.7
commentary
million. Job
on the press
openings
conference.
decreased in the
Right now, this
federal
is
Well,
a little bit more
I
of a
have
bull
other
flag
stuff in my
forming up
ear
the highs, of course.
Job
if we
that
just
I'm also
apply
listening
classic
to too.
technical
So I also
analysis,
got
Where
that
were the
too.
jobs?
technical analysis doesn't
Total
really live to
job
fight another
openings
day
for
when it comes to Powell
October.
commentary.
Preliminary
in just a little
read
bit.
for October.
Right.
Total.
All right, what else is going on here that we
7.6
can at least
mil.
talk about? Any big trade ideas, theses that are building ahead of
Expectation
Powell
was for that
comments?
to decline.
Not really.
Okay. And then where
Let's
did
just
the
double check some of
bounce
these
come
charts,
from?
make sure that we didn't get
Professional
blown up on the
business
core
services
list.
went red.
Looks like Nvidia is pretty much
I've got
status
a
quo.
little bit of a
Not
bounce in
worth touching
private
there.
education and
Apple, let's
healthcare
take a peek.
services.
Nice push to the
Leisure
upside on
and
Apple, still holding up over that
hospitality
daily
actually
20.
had a decline
I'd love to see
from
Apple
the
over this
last run.
279.50 spot.
Government
If we
had
could
a
break out over
decline
that,
from
I
the
think that
last
we're going
run.
back towards highs really.
State and local pop
Microsoft,
a little
unchanged
bit.
on the news, it looks like.
So where do those
Still
jobs come
drilling
from?
to the center of the earth
Trade.
at the 1 o'clock
Trade,
time frame
transportation,
and
and
unable to
utilities.
really bounce
This could be
meaningfully off of
holiday shipping.
476.60.
No.
That's when
Pass
This
on
is
Microsoft.
seasonally
That's a weird
adjusted
life
Really
choice.
do
growth
much with
in
that.
trade, transportations, and utilities. I mean, some
Back
of
to
this
some
also
dailies.
could be AI.
Amazon,
Data
how
center
we making out
stuff.
over here?
Wholesale-
Maintaining the 20 and the 50.
wholesale
I like
trade,
that.
Retail
Little
trade.
pop here, staying staying over the 20 SMA in orange,
utilities
50 SMA in
aspect of
blue.
that
Not
was
in the
smaller.
I'd like to see
trade.
Amazon
Portion of
remain
that
over those
was
levels into the
utilities.
close today, and ideally close over
Financial
VWAP. That would be
activities
helpful.
actually plummeted
back
in
over
job
here.
openings for
Take
financial
a look at
activities
Google.
on a seasonal adjusted basis. That's probably because of AI right here.
Google getting a
right?
little bit of lift.
Like finance and insurance, you're seeing a plummet.
A little bit of lift
in
off of this give back
finance
off the
and
morning
insurance
rally.
because
So
you'd rather just use
I like
AI.
Google if it can hold up
The
over
hell?
318. Y318. Look at the hourly
it
chart.
seems like
Look at the hourly
a
chart. You
lot of
break
these
out over
drop
318
higher,
over
this
the
drop
Monday
higher
high. You're probably talking about some continuation, at least to the
was
midpoint of the
in
range,
trade.
322s.
Retail
That could
trade,
be
wholesale
interesting.
trade.
Right.
Trying to see where else. Manufacturing a
So
little
that's
bit
Google.
of a move up. So that's
Broadcom,
good,
new
but
record
it could
high.
be a little
That looks
misleading.
good.
Was
Broadcom leader continues to lead.
So I
Looking
guess
good.
we'll find out.
Let's go look at the metaverse.
Rejection was here.
Metaverse still
Okay.
getting beat up here,
Alright,
but
so
trying
let's go
for a
see it.
back test lower high underneath
Qs right now are
648.75.
basically
Looks more like
flat
a
on
short
the
than a long
Qs.
to
You
me.
still got Bitcoin down about 4%. We did notice
Tesla,
that Bitcoin
now we've got
was
about
down
10 minutes to go until
4%,
Powell.
after earnings
Tesla trying to lift
yesterday.
over
And, we
447.25.
covered that already. DoorDash still down about 4. MP
Daily
Materials still
chart.
bleeding. That's not a surprise.
Still an inside
Nvidia
bar.
is having trouble
much to do
trying
there.
to actually get back to green here. There's a lot of rejection
JPM
here.
moving higher.
I've got
Helpful for the
what
long
else do we
thesis
have
of the
here?
broad
Google's
market.
up 35 bips.
Financials
Nice
being the
move
second
after
heaviest
the
weight
dot there.
sector.
Let's see what
If
Rick's
that's
got.
the case, then
Today's
he's the fuck up.
22 billion 30-year bond auction because of the Fed meeting. We'll have that
What do we have
tomorrow.
on
But I think it'll be
Palantir?
very interesting to see how that demand
More new
goes.
highs
And then
intraday over
finally,
187.25. Looks
Steve
pretty
Reisman
good.
pointed to some
Nice
of the
pop to the upside
percentages
over
of
this high of day
probabilities
shelf.
in Fed fund
I would
futures.
say any
And I
higher
always
lows
put
now
a word
over
of caution
187.25
that
are the
these things
ideal
are
look.
just markets. They
That's on the
change
hourly
moment
chart.
to moment.
Okay,
But the
he's coming
next
bullish because
meeting
of the
that
volume.
even is close
Gotta
to
stay
the
over that morning
possibility
high.
of an ease,
If you could
anything
do that,
over
you look pretty good
50%,
over the
that'll
junk
be the
drawer.
June 17th meeting at the moment.
Junk drawer comes from way back here, right?
All right, Rick, we
Not
really
bad.
appreciate
AMD.
it, and I think it's a good point to make that as this kind of
Inside
settles in
candle
for the
so far
past
just
20
balanced.
minutes,
Nothing to
markets
do
are
on
looking a little
AMD
bit
until
more
we
on the
drop
bond side like they were
214.35.
pre-decision,
People
although
were
equities
told
are still near session highs.
how
Let's
important
talk
it
more
is to
about
pay
that now
attention
with
to
Jeff
school and
Gilbert,
do
who's
Nice
well in
little
founder
rally
and
to
school.
the
CEO
upside,
of
but
KKM
nothing really to do
Financial.
about it yet.
What
You
did
know,
you say,
apply
sir?
yourself in
Welcome.
life.
Well, Kelly, kind of
And
a
some people
surprise.
made
I
fun
was
of that.
looking for a cut in rates more hawkish.
And
And
some
we
people
actually
made
got
fun of
more.
that.
If you think
Robin
about
Hood
that,
And
looks
see
good.
early
I like to hold at the
the
50.
difference between who's coming.
Generally in a
That's
bullish
analyzed.
configuration here.
Those are T-bills.
The reason I say
He
that
probably
is
he
that
was probably hard-headed.
Not QE.
Balance sheet. I think a
He
lot of
always
you had
people
he only
stronger
want to
sellers,
do
you
things
would've
his
shut up.
way. He don't want to
Equities,
learn
we've
nothing.
And we'll
seen a
await
little
Jerome
bit
He don't
of
wanna
shift
apply
in the
himself.
pressure, but I think this was
The
much
reason I
more
say this
dovish.
is
I
because
think
if
Fed
sellers
Chair
were going to
Powell
make a
is
stand, they
keeping
should have
his
broke
job
the
for
50
another
this
month
morning.
because that's the one that
You had
we
the
haven't
pure
talked
play
about yet.
rejection
That
of
is
these
the
prior
line
two
that is
highs
not pricing the
on
fact
Hood
that he
and
may
the
not
50
be
SMA
here
right here.
in May of
If we
2026
could have
President
rolled
Trump
over
has
and crushed that, that's where the sellers really stick in there. Right? Just no love. No love over there.
Yes.
That, in my view, is a little bit
QE
more
light,
of
I mean, we talked about this.
a
It's
bullish
Tomo is
indication
what it is. It's
that the sellers
Tomo.
did not
It's
step
not
up the
QE,
breakdown
it's
through the
Tomo.
key level.
This is
Let's take a
Tomo
peek
we
over at that
expected.
5-minute chart.
Tomo
Right? They had
we
two chances,
expected.
one off the
So,
morning and one into this
what
afternoon.
it is, it's overnight
So far looking like it's
liquidity
higher.
support. And that's
So
the
not
important
really in a
thing to remember.
bearish
This is
position here on Robinhood,
overnight
and more so looking like a potential
liquidity
long if
which
this can reclaim
reduces
over the
the
upper
risk
wick.
of a
Right, so you're
shock
talking about consolidation
to
like this,
the
and then some
financial
sort of continuation into
markets
the end of the week.
slash
That'll be a watch depending on today's close.
slash private
Right,
credit.
so that is Hood.
It's
Let's get back on over to these
not
ES
bearish.
futures.
It's actually supportive.
You're getting balance here ahead of the
lending,
commentary from
which is
Jerome Powell, which makes sense.
supportive
Right, the market typically is going to
risk.
hold its breath now until he starts speaking.
What is Tomo?
You already know
Tomo.
that as soon as he says the first two words out of his
Tomo
mouth,
from
right?
yesterday's video.
Good afternoon.
From yesterday's video.
Every
which we
single time.
explained.
So good afternoon, and then
Yesterday's
comes the red
video,
candle, right, to unwind some of this.
temporary Open market
What we'll really be looking
operations.
for through Jerome Powell's
Just gave a
commentary
heads
today
up.
is all
Tomo,
about whether
no,
or
it
not
doesn't,
his
Sammy.
comments actually lean
What is he,
hawkish,
your brother?
or if they lean a bit more
so
neutral.
This is very
Right? I definitely
different
don't
from
think that he's going to
QE
lean all that
because
dovish. That
it
wouldn't
gives this
make all that much sense to me, considering what we
of
see out of the
long-term
private
bond
data
buying, but it's
when it comes to
not. Very
ISM, for
short-term
example.
bond buying.
ISM
And,
PMIs
it's
on both
a,
services and
liquidity
manufacturing
support
show us
for
a
private
decline
credit.
but still elevated inflation,
Okay,
Oh.
good.
as
So
well
let's
as
go
a
see. We've got Powell coming out in 8
worsening
minutes.
but
So the real
what would you
question is
say?
whether they
Worsening
intend to do
but
anything
flat
beyond kind of keeping up with
labor
the level
side
of
of the
GDP. They're
situation.
kind of
No, QE is
So
okay,
ISM
QE is just
gives us a
bond
little bit of
repurchases. What's
insight there.
different?
With Powell now on in 7 minutes,
It's
we'll have
time,
to pipe him on
okay?
in
So I'll-
when the
I'll write
audio
this
is
down.
correct. But let's
It's
just
time.
throw up.
The
I think
difference
we
is
could do
time.
bingo board there. Let's go with.
The
I think this should be
difference
Powell.
is
That's
time.
the SEP.
QE
Let me just grab this though.
equals
What do we want? Let me maybe turn
long-term
that off for just a
bond
second.
buying, such as
And make sure we get Powell in
you know,
there.
5, 10,
Okay,
20-year Treasury bonds,
And we'll turn the audio on when the
holding
time is
them.
correct.
So the money permanently,
There's the Fed building.
effectively,
I wish it was a bluebird day.
flows
I mean,
into
boy, oh
the
boy, I could throw a
economy.
rock out my
Okay?
window and hit that building, but it's about as
TOBO
gray as it gets out
equals
today, let me tell you.
overnight
About as gray as it gets.
lending,
So,
Support
but
breaking market.
a nice summer
but
picture of the Fed.
unwinding of
Not
that
bad.
lending every day.
All right.
So the money doesn't
let's make a couple of
permanently
adjustments,
show
maybe to
up
think or
in
swim.
the
Let's pull this
economy.
out a little bit.
It just helps
Not too
banks
far,
cover their
just far
overnight
enough
bills.
I can see the edge of my chart.
Permanent.
There we go. And you guys can see what instrument
there
we're
we go.
looking at. This
So
is
there's
the
a
ES.
huge difference between QE and Tomo.
So, right up there.
However, they both
that's good.
help.
And when Powell starts
right?
to get on, he will
QE
he'll
is
show up
really
right there in that little
bullish
box.
because
So,
you're
what do we have on the bingo
literally
card
expanding
that we
money
can
supply.
have some
Okay?
fun with
So
today?
QE,
Let's just go through it quickly.
very bullish
Top left,
because
tariffs.
it
Tariffs need to be mentioned
expands
about
the money
5 times,
supply,
and we will check that one off
basically
as a win.
permanently.
What
Okay?
else? Some pretty easy, I would say,
QT
like freebies on here.
shrinks
So
the
after
money
tariffs, let's
supply,
just work our way like a book,
basically
reading from
permanently.
top down, right to
And
left,
then
or left to
Tomo
right. Excuse
makes
me.
no difference.
Or left to right.
Tomo basically
Tariffs by 5. Uncertainty
Tomo
is on the bingo card. That's going to be a pretty easy
tonight
one.
expands it, and
We've got
tomorrow
recession mentions.
shrinks it.
I don't think Powell's going to mention
so
recession,
it really
and
has
it's very
no
rare that he
permanent
does. It would
influence.
probably come from a reporter.
That's
A
the
reporter would
explanation.
have to spur something
No
that sparks that
permanent
idea or
effect.
thought,
However,
and then from there,
why
Powell might follow up with a
it's
comment.
seen as
Um,
bullish
in
is
the
that it
fourth
reduces
column, you see,
shock
no
risks
clue what R prime
in the
is. R
economy.
prime stands for the neutral rate,
It's like
and
a capacitor.
I don't. I
shock
think the way that we'll get this to get
absorber.
checked off on the
I think
bingo
that's the
board
way to
is
look at that,
Powell
right?
will more so dance
Cool.
around the opportunity
So,
to
I
comment
think
on
that's
what the actual
somewhat
neutral rate is.
All right,
He'll say
great.
something like, you know, we can estimate, but we really just
okay,
have to
good.
figure it out in real time. Right? He'll say something along those lines.
So
Purple tie is too
now
easy. That
we
should
wait
just
for
be a
Powie
freebie
Wowie.
on the purple tie.
Q's had some of their
So
enthusiasm.
I mean, you could just
Now we gotta
slot in
wait to
purple
see
tie
what
for the
Powie
TV
Wowie says.
right in the middle. How about
We
that?
have our. Somebody says stop wasting time answering
Mentions
dumb basic
GDP.
questions.
I think that that's reasonable considering
People
the
get into
uptick
this
on the
mindset of, like,
revision
it
to
can
the
only be
SEP.
one way,
Looks like I
it
caught
means
my
one
voice a
thing.
little bit here.
It's
Let's
why I
not
always-
jinx
I
it.
try
Maybe
to
knock
break
on
down
wood.
and explain
Nice
it.
mahogany wood.
So like
Checks
I'm
the
not trying to be some
tells a
arrogant,
reporter
I think
to check
sometimes
the
people
SEP.
hear
I
that.
think that's a funny one.
Kevin
In my view, it's some of the best moments of the commentary from Powell is when he kind of tries to stick it to a reporter, and someone might ask something like, "How do you guys think about inflation for the coming
and this is why I say I don't have
I don't
personal debt
for the coming
House hack my company
couple of months or
does not
something like
have
that?"
Any bank
Be like,
debt,
well, you can kind of
and
see our
we
thoughts in
think
the
people
SEP,
should
so
be
just check the SEP.
diversified,
It dodges the question.
and not take on massive
Lisa
risks
Cook has been really apt
because
to
the
comment on
economy is at
asset
a teetering
prices,
point.
so
But the
let's see
Federal
if
Reserve
Jerome
is saying
Powell
things
can
are
put that to
good.
bed
But then
about
again, how
not
much do we
commenting
trust
on asset
that?
prices. That
Because
is
when
the
things, like, if they
second
said things
row,
were gonna go bad,
second
things would
column.
instantly
It's very
self-fulfill
classic
and go
that he
bad.
fumbles a word. I do
So
it all
you
the
have to
time.
take
I give him
everything
no fault for that, but we'll put it on
Alright,
the
so
bingo
let's
board.
look at the
Let me
10-year
be
Treasury
clear
yield
when
just
he's
came
getting
down a
real
little bit.
stern
Wow,
with
the
someone.
10-2
Let
just
me be
popped
clear.
up.
This
To
does not mean
60.
blah 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 blah.
Wow.
If he
look at
laughs or
that.
chuckles at a question, would be pretty good.
That's very
Third row,
interesting.
labor market cooling.
Yeah,
That's pretty. I
60
think
on
that's
the
a given.
10-2
That's a pretty
spread
easy
right
one.
now. Okay, so
Division of members'
now,
opinions
let's get
on the
to
dissents that we
our-
talked about and Mirren. I think that's a topic of conversation. Short-lived. It's gonna drive me nuts if he
bingo
says that
sheet.
again. Short-lived.
So this is our bingo
God,
sheet.
I don't know
So
what
our
it is
bingo
about where
sheet,
he's from or
indicates
anything of the sorts, but
that,
short-lived. I've never
you know,
heard that word
we
pronounced that
expect
way,
there
but
are things
so be it.
that are bullish
Data
that Powell
dependence,
could say, and
almost
there
a
are things that are
freebie.
bearish
We've
Powell
got
could
well
say.
positioned,
And so
monetary
especially if you're
policies, well
trading,
positioned to
you know,
adjust
you
to the
wanna
incoming
pay attention to
totality of
this
the
kind of
data,
stuff.
so on and so forth.
But what you've
Speaking
got
of,
is
right,
on the
mentions no
bullish
data because of the
side,
shutdown.
for
That's
the
the bottom row.
economy,
Second
but
column.
bearish on fewer
He's going to
rate
avoid
cuts. You've got
commenting
this left
on
column.
Trump, of
Let
course.
me
That's
start
almost
with
a
the
given.
dovish stuff.
Same thing with
So
Hassett.
Powell
Hassett is
going
in the bottom
dovish,
right.
which would be
Hassett
good for the
was just
stock
on
market,
Fox
would be
Business, I
talking
believe,
about the
talking about
analogy
wanting
of
a 50
fog,
basis point cut,
talking about how
which
we've
is
gotta
just
wait
kind of
for
wild,
core
but
data
I mean,
next
it
week.
is what it is.
Labor
So
force participation.
that's up there.
could
Policy
rise
stance, dual
suddenly or
mandate,
be
some pretty easy
bad.
ones. Crypto and
You've
blockchain,
got
we didn't get that last
unclear
time.
if AI will
Jerome
lead
Powell
the
in the
labor
October
market.
FOMC
Tariffs are
did not
blocking
comment
Chinese
on crypto,
deflation,
blockchain, anything of the
right?
sorts.
Eventually
Getting a
that
little bit more
deflation will
movement
show up.
on crypto
No
and
comments on that,
blockchain
Sherry.
and the
These are the more
tokenization of
dovish
assets.
things.
So it would be interesting to hear some thoughts on
and,
that and just to check it
any
off the
kind of
bingo
talk
board, of
about a
course. So
pause
we'll watch out
or
for
a
it, but for now,
suggestion of a
it kind of
pause
lives on as a
verbally is
maybe.
bad.
Great
they're
question
kind
is
of
something he
implying
says
a
sometimes
pause
to some of those
already
reporters.
in the summary of economic
And
projections.
what else? QE is going to be a big
great.
tell as to whether or not
Summary
this
of
market's going to
economic
moon.
projections moves
Right?
GDP up
Paper,
and
not iPad,
unemployment rate
passive
down,
we talked
suggests
about
a
already.
pause. See,
So this is
we
what we're
wrote
working with.
this
You can see the market's
before
rolling over
the
here,
summary of
unwinding
economic
that entire
projections right
first
here.
push from the actual release of the
And
documents.
what I got
That's the SEP
was
as well as
down
the
unemployment rate,
strike
up
through
GDP a
version
lot
of
more
the
than
statement
I thought.
and
So this
the
already happened.
actual rate decision itself.
So we can already
So with about
shut this
a minute
off.
and, I don't know, 45 seconds to go.
You
I'm actually
pretty
a little
much
surprised
wanna
I don't have the
pick a
elevator
voice.
music going yet
Exactly what happened.
on this stream for Powell here.
Obviously,
It is
we got some
live.
basics
Double
in
check.
here, some
I'm gonna
quotes
give
that he
that a
might
refresh,
say,
perhaps.
the dual mandate, hawkish cut. I
See.
think that's pretty much what we're going to
We're
get.
live
We're
there.
going to see what Powell says.
When the audio
Businesses
becomes
struggling
appropriate to
find
pipe in,
talent,
I will
we're
pipe it in.
hiring,
But
we'll
for now,
see.
we're just kind of
You know, any
sitting
kind
in
of talk about potentially
limbo on
the
trade
jobs,
path.
the JOLTS data
We'll give
being
him a couple of minutes here,
strong
but
because
we are
of
approaching that
seasonal hiring or like
2
people
o'clock,
expect
2:30
early
time
holiday
frame.
season. You know, that could be
right about now.
2:29
because
and 30
what if
seconds. We end up getting
Market's coming back down, supporting the
some
VWAP.
kind of,
Not a bad look here on the ES. Right, so our my
reversal
primary
effect.
choice at least is to
That's
leave the
always
ES
the
up
risk,
here
because we look
as we at least get the beginning
the JOLTS
stages
data,
of
and the
Powell's
JOLTS data
commentary, and
tells
then
us
as
that
and if we
some
need
of
to
this
cycle through some
was
other names,
a lot of this
we'll
was
get
in
into that
trade.
stuff as we
and
see
trade
fit.
could be short term.
All right.
Look at the
So
volume
Powell,
going
come on out.
Okay.
Come on out. Alleviate me from all of my
Okay, so
talking.
206. So
Make
you
it
see
stop.
the potential for this
Silver
market
just
to
tanked,
take this
SLV.
and run with it in a dovish direction, but
I
it's
wouldn't
going to
say
be
it
really
tanked.
important how Powell emphasizes whether the
No, this is a brand new bingo
Oh,
board.
here we
Literally
go.
just made this bingo board 20
Here we go.
minutes
Let's go
ago.
back
It's not
over
an
to
old
ES.
bingo board. It's
I
from
gotta
20
use
minutes
this
ago.
Audio going.
It's just, I
Just double
said,
check that it's not
if the SEP
elevator
comes
music.
out with
I'll be right
GDP
back.
up and
I gotta
unemployment
keep this
down,
going.
it suggests the pause. The SEP came out
Not
20
elevator
minutes ago.
music.
Well, so the bingo board was like from 45 minutes ago,
Alright.
and the SEP came out
When and
29
if
minutes
Powell
ago.
approaches, we should get some audio to come in.
So, to your point
And
about
we'll
20
monitor
times out of
for
20 times,
what
by
he's
my
got
math,
for
Where
us.
does this put this on a soft landing?
Oh, there's the door.
It's good. All this stuff is bullish soft landing. So, you know,
Let me know if the audio is too quiet, too loud.
I'll write that right here. Oh yeah, and we should say he's going to say good afternoon, right? Bullish.
My colleagues
soft
and I
landing.
remain
Let's
squarely
quickly add
focused
to
on
the bingo
achieving our
board
dual
on
mandate
time
goals of maximum
says
employment
good
and stable
afternoon.
prices for the benefit of the American people.
Okay. All right.
Although
so you can see
important
it quickly. I
federal
put it on
government data
here.
for the past
On
couple
time,
of
it says
months
good
have yet to be
afternoon.
released,
All right, here we go. So he'll
available
be out in
public
about 30
and
seconds.
private sector data
Keep in mind,
suggests
if
that
you
the
want to
outlook
use
for
coupon code
employment and
SATA
inflation
reinvest,
has not
you can get
changed
lifetime access to my
as much
startup's
since our
artificial
meeting
intelligence.
in October.
That's coming out.
Conditions in the labor
this month.
market appear to be gradually
And all of
cooling,
the updates
and inflation
are,
remains
yours
somewhat
included.
elevated.
You pay once, be any monthly
In
fees.
support of our goals,
Obviously,
in
when all
light
the
of the
products
balance
are out, we'll have
of
monthly
risks
fee,
to
and
employment and
we'll have a SaaS
inflation,
product that we hope we
today
can,
the Federal Open Market
can
Committee
IPO.
decided to lower
Here he
our
is.
policy interest rate
All right, go
by
check it
a
out,
quarter
househack.com.
percentage point.
there is Jerome
As a separate
Powell.
matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time,
My
thus
colleagues and I
supporting
remain
effective
squarely
control of our
focused on
policy
achieving
rate.
our dual mandate goals of
I will
maximum
have more to
employment
say about
and
monetary
stable
policy
prices
and its
for the
implementation
benefit of the American
after
people.
briefly reviewing economic
Although
developments.
important federal government data for the past couple of
Although
months
some
have yet to
key
be released,
government data have yet to be
available
released,
public and private
available
sector
indicators
data
suggest that
suggests
economic
that the
activity
outlook for
has been
employment and
expanding.
inflation
Consumer spending
since our
appears to have
meeting
remained
in October.
solid, and business
Conditions
fixed
in the
investment
labor
has
market appear
continued
to be
to
gradually
expand.
cooling, and inflation
In contrast,
remains somewhat
activity in the
elevated.
housing sector remains weak.
In support of our goals, in light of
The temporary shutdown of the federal government has likely weighed on economic
today,
activity
the
in the
Federal
current
Open Market
quarter,
Committee decided to
but
lower
these
our
effects
policy
should be
interest rate
mostly offset by
by
higher
quarter
growth
percentage
next
point.
quarter, reflecting
As a
the
separate
reopening.
matter, we also decided to initiate
In our summary of
purchases
economic
shorter-term
projections, the
Treasury
median
securities
participant projects
solely
that
for the
real
purpose of
GDP will
maintaining
rise
an ample supply of
1.7%
reserves
this
over
year
time,
and
thus supporting
2.3%
effective
next year,
control of our policy
somewhat
rate.
stronger than projected in
I will have
September.
more to say about monetary policy and its implementation
In the labor market,
after
although
briefly
official
reviewing
employment data
economic
for
developments.
October and November are delayed,
Although some key
available
government
evidence
data have
suggests
yet
that
to be
both
released,
layoffs and hiring
available
remain low,
indicators suggest
and
that
that both
economic
households'
activity
perceptions
has been
of job
expanding at a
availability
moderate pace.
and firms' perceptions
Consumer spending
of
appears to
hiring
have remained
difficulty
solid,
continue to
and
decline.
business fixed investment has continued to
The official
expand.
report on the labor market for September,
contrast,
the most recent
activity in the
release,
housing sector
showed
remains
that the
weak.
unemployment rate continued to edge up,
The
reaching
temporary shutdown of the
4.4%,
federal government has
and that
likely
job
weighed
gains
on
had slowed
economic activity in
significantly
the current
since
quarter.
earlier in the year.
But these effects should be
A good
mostly
part of the
offset by
slowing
higher
likely
growth
reflects
next
a
quarter,
decline in the growth of the labor force due to lower
In our
immigration and
summary of
labor force
economic projections,
participation.
the median participant
Though
projects
labor
that
demand
real
has
GDP
clearly
will
softened
rise
as well.
1.7% this year,
In In this less
and
dynamic and
2.3%
somewhat softer
next year,
labor market,
somewhat
the
stronger than
downside risks
projected
to
in
employment
September.
appear to have risen in recent months. In the
In
labor
our market,
market,
although
the
official
median
employment
projection
data
of the
for
unemployment rate
October
is
and
4.5%
November are
at the end of
delayed,
this year. and edges
Available
down
evidence
thereafter.
suggests that both layoffs and hiring remain low.
Inflation has
and that
eased
both households'
significantly from its
perceptions of
highs
job
in
availability
mid-2022,
and firms'
but remains somewhat
of hiring
elevated relative to our 2%
continue to decline.
longer-run goal.
The official report
Very
on the
little
labor
data on
market for
inflation have
September,
been released
the most recent
since our
release,
meeting in October.
showed that the unemployment rate continued
Total
to edge up,
PCE prices
reaching
rose 2.8% over the 12
the
months
job
ending in
gains have
September,
slowed significantly since
and
earlier
excluding the
in
volatile
year.
food and energy categories,
A good part of the
core
slowing
PCE
likely
prices
reflects the
also
decline
rose
in the growth of the
2.8%.
labor force due to lower
These readings are
immigration and
higher
labor
than
force
earlier in the year
participation,
as inflation for goods
though
has
labor
picked up,
demand has clearly
reflecting the
softened
effects
as
of
well.
tariffs.
In this
In contrast,
less dynamic and
disinflation
somewhat
appears to be
softer labor
continuing
market,
for services.
the downside risks to employment
Near-term
appear to
measures
have
of
risen
inflation
in recent
expectations
months.
have declined from their peaks
In our
earlier in
SEP,
the year,
the median
as
projection of
reflected
the
in both
unemployment rate
market
is
and survey-based
4.5% at the end
measures.
of this year, and
Most
edges
measures
down
of
thereafter.
longer-term expectations remain consistent with our 2%
Inflation has
goal.
eased significantly from its highs
The median
in
projection in the SEP
2022,
for total
but
PCE
remains
inflation is
somewhat
2.9%
elevated
this
relative to our
year
2%
and
longer-run
2.4%
goal.
next year.
A bit
Very
lower
little
than the
data on
median
inflation
projection have
in
been
September.
released since our meeting in October.
Thereafter, the median falls to 2%.
Total PCE prices rose 2.8% over the
Our
12
monetary
months
policy
ending in
actions are
September,
guided by our dual mandate
and
to promote
excluding the
maximum
volatile
employment
food and
and
energy
stable
categories,
prices for the American
core
people.
PCE prices also
At today's
rose
meeting, the
2.8%.
committee decided to lower the target range for the
These
federal funds
readings are
rate
higher
by
than
a quarter
earlier in the
percentage
year as
point
inflation
to
for goods has
3.5
picked
to
up,
3.75%.
reflecting the effects of tariffs.
In the near term,
In
risks to
contrast,
inflation are
disinflation
tilted to the
appears to be
upside,
continuing for
and
services.
risks to employment to the
Near-term
downside,
measures of inflation
a challenging
expectations have
situation.
declined from their peaks
There
earlier in
is
the year,
no risk-free
as
path for
reflected in both
policy as
market
we
and
navigate this
survey-based
tension
measures.
between our employment
Most
and
measures
inflation
of
goals.
longer-term expectations remain
A reasonable
consistent
base
with our
case
2%
is that the
inflation
effects of
goal.
tariffs on inflation will be relatively
The median
short-lived,
projection in the SEP
effectively a
for total
one-time
PCE
shift
inflation
in
is
the price level.
2.9% this year
Our
and
obligation
2.4%
is
You gotta be
next year.
kidding me.
a bit
Short-lived,
lower
huh?
than the median projection
My
in
man.
September.
Inflation problem.
Thereafter, the median
But
falls
with
to
downside
2%.
risks to employment having risen in recent months,
Our
the
monetary
balance
policy
of risks
actions are
has
guided
shifted.
by our dual mandate
Our
to promote
framework
maximum
calls for us
employment
to
and
take a
stable
balanced
prices
approach
for
in
the
promoting
American.
both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a quarter percentage point. With today's decision, we have lowered our policy rate 3/4 of a percentage point over our last 3 meetings. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance since September bring it within a range of plausible estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of 2026 and 3.1% at the end of 2027, unchanged from September. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. Let me turn now to issues related to the implementation of monetary policy, with the reminder that these issues are separate from and have no implications for the stance of monetary policy. In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels. Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time. Such increases in our securities holdings ensure that the federal funds rate remains within its target range and are necessary because the growth of the economy leads to rising demand over time for our liabilities, including currency and reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled by the setting of our administered rates, rather than day-to-day discretionary interventions in money markets. In this regime, operations are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning, and should be used when economically sensible. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing our inflation sustainably down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. At the Fed, we will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions. Across the country, everything we do is in service to our public mission. At the Fed, we will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Schneider with Reuters.
Howard.
Thank you. Howard Schneider with Reuters. Just first turning to the statement, just to be clear, we're on the same page here. The insertion of the phrase, considering the extent and timing of additional adjustments, does that indicate that the Fed is now on hold until there's some clearer signal from inflation or jobs or the evolution of the economy along the baseline outlook?
So, yes, the adjustments since September bring our policy within a broad range of estimates of neutral. And as we noted in our statement today, we are well positioned to determine the extent and timing of additional adjustments based on the incoming data, the evolving outlook, and the balance of risks. That new language points out that we'll carefully evaluate that incoming data. And also, I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves.
And if I could follow up on the outlook there, it seems like with the additional GDP growth coupled with easing inflation and a fairly steady unemployment rate, this seems like a pretty optimistic outlook for next year. What's given rise to that? Is this an early bet on AI? Is there some sense of improving productivity out there? What's driving that?
So a number of things are driving what's happening in the forecast. And I would say if you look broadly at outside forecasts, you do see a pickup in growth in many of those now too. So it is it's partly that consumer spending has held up. It's been resilient, and to another degree, it is that AI spending on data centers and related to AI has been holding up business investment. So overall, the baseline expectation for next year is, at least at the Fed, and I think with outside forecasters too, is a pickup in growth from today's relatively low level of 1.7%. I mentioned that the SEP median is 1.7 for this year growth and 2.3 for next year. You actually, some of that is due to the shutdown. So you can take 0.2 out of 2026 and put it in 2025. So it would really be 9 and 2.1. But overall, yes, for a few reasons, fiscal policy is going to be supportive. And as I mentioned, AI spending will continue. The consumer continues to spend. So it looks like the baseline would be solid growth next year.
Steve.
Thank you, Mr. Chairman, for taking our questions here. You had previously described rate cuts in terms of a risk management framework, and kind of following up on what Howard was asking, is the risk management phase of rate cuts over here, and have you taken out sufficient insurance, I guess, against potential weakness in terms of the data we might get next week when it comes to employment?
So we're going to get a great deal of data between now and the January meeting, and I'm sure we'll talk more about that. And the data that we get are going to factor into our thinking. But yes, we have, if you go back, we held our policy rate at 5.4% for more than a year because inflation was high, very high, and unemployment and the labor market was really solid at that point. Summer of 24. Inflation came down, and the labor market began to show real signs of weakness. And so we decided, as our framework tells us to do, that when the risks to the two goals become more equal, you should move from a stance that favors really dealing with one of them, in that case inflation, to a more balanced, more neutral setting. And so we did that. We did some cutting, and then we paused for a while to work our way through what was happening in the middle of the year. And then we resumed cuts in September, and we've cut now 3. We've now cut a total of 175 basis points. And as I mentioned, we feel like where we're positioned now we're well positioned to wait and see how the economy evolves from here.
If I could just follow up on the SEP, you have a whole lot of big increase in the growth numbers, but not a big decline in the unemployment numbers. And is that an AI factor in there? What is going on in terms of the dynamic of you get more growth, but you don't get a whole lot of decline in unemployment? Thank you, sir.
So the implication is obviously higher productivity. And some of that may be AI. It just also, I think, productivity has just been almost structurally higher for several years now. So if you start thinking of it as 2% per year, you can sustain higher growth without more job creation. Of course, higher productivity is also what enables incomes to rise over long periods of time, so it's basically a good thing, but that's certainly the implication.
Thank you. Colby Smith with the New York Times. Today's decision was clearly very divided. It wasn't just the 2 official dissents against a cut, but there were also soft dissents from 4 others. And I'm just wondering if this reluctance from several people to support recent reductions suggests that there is a much higher bar for cuts in the near term. And what exactly does the committee need to see if things are well positioned right now to support a January reduction?
Sure. So let me just say, as I mentioned, and as I've mentioned here before, the situation is that our 2 goals are a bit in tension, right? So interestingly, everyone around the table at the FOMC agrees that inflation is too high and that we want it to come down, and agrees that the labor market has softened and that there's further risk. Everyone agrees on that. Where the difference is how do you weight those risks, and what does your forecast look like, and where do you, ultimately where do you think the bigger risk is, and it's very unusual to have persistent tension between the 2 parts of the mandate, and when you do, this is what you see, and I think it's actually what you would expect to see, and we do see it. Meanwhile, the discussions we have are as good as any we've had in my 14 years at the Fed. They're very thoughtful, respectful, and you just have people who have strong views, and we come together and we reach a place where we can make a decision. We made a decision today. We had 9 out of 12 supported it, so fairly broad support. But it's not like the normal situation where everyone agrees on the direction and what to do. It's more spread out, and I think that's only inherent in the situation. In terms of what it would take, we all have an outlook in terms of what's going to come, but I think ultimately having cut 75 and the effects of the 75 basis points will only begin to be coming in. As I've said before a couple times, we're well positioned to wait to see how the economy evolves. We'll just have to see. And we will get, as you know, quite a bit of data. I should mention on the data, as long as I'm talking about it, that we're going to need to be careful in assessing, particularly the household survey data. There are very technical reasons about the way data are collected in some of these measures, both in inflation and in labor.
I swear, I
in the
always
labor
get
market,
phone calls at the
so
wrong
that
time on the most
data may
important
be
days. That's
distorted,
crazy.
and not just sort of
And it's like
more
important
volatile,
stuff
but
too.
distorted, and that's really because data was not collected in October and half of November. So we're going to get data, but we're going to have to look at it carefully and with a somewhat skeptical eye by the time of the January meeting. Notwithstanding that, we will have a lot of the December data by the time of the January meeting. So we expect to see a lot more, but I'm just saying that what we get for example, CPI or for the household survey, we're gonna look at that really carefully and understand that it may be distorted by very technical factors.
And just one more question on dissents. I mean, you talk about it in a very positive way, just given the complicated nature of the situation we're in economically. But is there any point in which those dissents become counterproductive, either to the Fed's communication and the messaging around the policy path forward?
I don't feel that we're at that point at all. I don't. I would say, again, these are good, thoughtful, respectful discussions, and you hear people say, and you hear many outside analysts say the same thing. I could make a case for either side. I mean, I could make that case. It's a close call. We have to make decisions, and we always hope that the data will give us a clear read. But in this situation, you have competing. If you look through the SEP, you'll see that a very large number of participants agree that risks are to the upside for unemployment and to the upside for inflation. So what do? You've got one tool. You can't do two things at once. So at what pace do you move? What size moves do you make, and that kind of thing? And what's the timing of them? It's a very challenging situation. I think we're in a good place to, as I mentioned, to wait and see how the economy evolves.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, there's been some discussion recently of the 1990s. In the 1990s, the committee did two discrete sequences of 3 quarter-point cuts, one in 1995-96 and one in 1998. And after both of those, the next move in rates was up, not down. With policy now closer to neutral, is it a foregone conclusion that the next move in rates is down, or should we think of policy risks as genuinely two-sided from here?
So I don't think that a rate hike is anybody's base case at this point, and I'm not hearing that. What you see is some people feel we should stop here and that we're at the right place and just wait. Some people feel like we should cut once or more this year and next year. But when people are writing down their estimates of policy of where it should go, it is either holding here or cutting a little or cutting more than a little. So I don't see the base case as involving that. So of course, a data set of 2, now 3, is not a big data set, but you are right about those 2 3-cut times in the 90s.
If I could follow up, the unemployment rate has been rising very gradually for the better part of 2 years, and indeed the statement today no longer describes the unemployment rate as remaining low. What gives you confidence it won't continue rising in 2026, especially when housing and other rate-sensitive sectors still appear to be feeling restrictive policy from the notwithstanding the 150 basis points in cuts prior to today?
So I think the idea is that with now having cut 75 basis points more now and having policy, I'd call it in a broad range of plausible estimates of neutral, that will be a place which will enable the labor market to stabilize or to only tick up 1 or 2 more tenths, but we won't see, any kind of a sharper downturn, which we haven't seen any evidence of at all. At the same time, policy is still in a place where it's not accommodative, and we feel like we have made progress this year in non-tariff related inflation, and as tariffs come through, as they flow through, that'll show through next year. But as I said, we're well placed to wait and see how that turns out. That is our expectation, but we're going to start to see the data, and it'll tell us whether we were right or not.
Claire.
Claire Jones, Financial Times. A lot of people interpreted your comments at the October meeting that, when there's a foggy situation, we slow down, to mean that, there wouldn't be a cut now, there'd be a cut in January instead. So it'd be good to get a sense of why did the committee decide to move today rather than to move in January instead? Thank you.
Right. So in October, I said that there was no certainty of moving, and that was indeed correct. I said it's possible you could think about it that way, but I was careful to say other people could look at it differently. So why did we move today? I would say point to a couple things. First of all, gradual cooling in the labor market has continued. Unemployment is now up 0.3 from June through September. Payroll jobs averaging 40,000 per month since April. We think there's an overstatement in these numbers by about 60,000, so that would be negative 20,000 per month. And also, just to point out one other thing, surveys of households and businesses both show declining supply and demand for workers. So I think you can say that the labor market has continued.
The market is unstoppable.
Maybe just a touch more gradually than we thought. In terms of inflation, it's come in a touch lower, and I think the evidence is kind of growing that what's happening here is services inflation coming down, and that's offset by increases in goods, and that goods inflation is entirely in sectors where there are tariffs. So that does build on the story, and so far it's only a story, that that the goods inflation, which is really the source of the excess at this point, almost more than half the source of the excess inflation is goods, is tariffs. And you've got to say then, so what do we expect from tariffs? And I would say that is to some extent down to looking for broader economic heat. Do we see a hot economy? Do we see constraints? Do we see what's going on with wages? You saw the ECI report today. It doesn't feel like a hot economy that wants to generate, Phillips curve kind of inflation. So we look at all those things, and we say that this was a decision to make. Obviously, it wasn't unanimous, but overall, that was the judgment that we made, and that's the action we took.
And just on the ample reserves point, how concerned were people around the table about some of the tensions we've seen in money markets? Thank you.
I wouldn't say concerned. So what really happened is this. Balance sheet shrinkage, sometimes called QT, went on. We had a framework in place for monitoring it, and nothing happened. The overnight reverse repo facility went down pretty much close to zero. And then beginning in September, the federal funds rate started to tick up within the range, right? And it ticked up almost all the way to interest on reserve balances. There's nothing wrong with that. What that's telling you is that we're actually in an ample reserves regime. So, we knew this was going to come. When it finally did come, it came a little quicker than expected, but we were absolutely there to take the actions that we said we would take. So, and those actions are today. So, we announced that we're resuming reserve management purchases. That is completely separate from monetary policy. It's just we need to keep an ample supply of reserves out there. Why so big? The answer to that is, if you look ahead, you'll see that April 15th is coming up, and our framework is such that we want to have ample reserves even at times when reserves are at a low level temporarily. So that's what happens on tax day. People pay a lot of money to the government, reserves drop sharply and temporarily. So this seasonal buildup that we'll see in the next few months was going to happen anyway. It was going to happen because April 15th is April 15th. There's also a secular ongoing growth of the balance sheet. We have to keep reserves, call it constant as it relates to the banking system or to the whole economy. And that alone calls for us to increase about $20–25 billion per month. So that's a small part. That's going on. It's also happening in the context of a temporary few-month front loading to get reserves high enough to get through the tax period in mid-April. So that's what's happening there.
Andrew.
Thanks, Mr. Chairman. This is the last post-FOMC press conference before an important Supreme Court hearing next month. Can you talk about how you're hoping the Supreme Court will rule? And I'm just curious why the Fed's been so reticent on such a pivotal matter.
It's not something I want to address here, Andrew. You know, we're not legal commentators. It's before the courts, and we think we don't think that we help matters by trying to engage as a public discussant of that. I'll give you a mulligan, though.
No, thanks. I don't know if that means I get 3 questions, but
just one more.
I guess I wanted to come back to the 1990s question, and like, do you see that as a useful model for thinking about what is happening in the economy right now?
I don't think it rises to that level. So I did think that in 2019, where we cut 3 times, but you know, this is
whoa, this is gamma squeezing.
It's not the 1970s, let's put it that way, but we do have tension between the 2 goals. And so that's just unique in my time at the Fed, and I think going back a long ways, we haven't had that. In our framework, as you know, says that when that's the case, that we try to, you know, take a balanced approach to the 2 things, and we look at how far they are and how long it would take to get them back to each of them back to the goal. And that's a very subjective analysis, really. But it just tells you you've got to, and I think ultimately what it says is when they're broadly equally threatened or equally at risk, you should be kind of neutral. Because if you're either accommodative or tight, you're favoring one or the other goal. And so we've been sort of moving in the direction of neutral. Now we're in the range of neutral. We're in the high end of the range of neutral, I would say, and that's what we're doing now. It so happened that we've cut 3 times. That, you know, we haven't made any decision about January, but as I've said, we think we're well positioned to wait and see how the economy performs.
Edward.
Thanks, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask you, the inflation expectations has come down in your SEP report. Do you see the tariff price increases as passing through in the next 3 months? Is it a 6-month process that we're looking for that to end? And then because of that, is jobs the threat to the economy?
So with tariff inflation, you know, there's the announcement of a tariff, and then there's, you know, they start to take effect, and then it takes some months. Goods may have to be shipped from other parts of the, you know, it may take, you know, quite a while for an individual tariff to take its full effect. But once it's had that effect, then the question is, isn't that just a one-time price increase? So we actually look at it, all of the announcements and what you get from all that. You see sort of for each one of them, there's a time period, and then it's fully in. So if there are no new tariff announcements, and we don't know that, but let's assume there are no major new tariff announcements, inflation from goods should peak in the first quarter or so, right, or roughly. You know, we haven't been able to predict this with any precision. No one is. But call it the first quarter or so of next year should be the peak. And from here, it shouldn't be big. It should be a couple tenths or even less than that. We don't really have precision on this. And after that, again, if there are no new tariffs that are being announced that will take 9 months to get fully in, and 9 months is also an estimate, then you should start to see that coming down in the back half of next year.
And I want to see if I could address sort of the elephant in the room. The president's been talking openly about a new Fed chairman. Does that hinder your current job right now or change your thinking at all?
No.
Mike.
No mulligans for it. Michael McKee from Bloomberg Radio and Television. 10-year rates are 50 basis points higher than when you started cutting back in September of 2024, and the yield curve basically has been steepening. Why do you think that continuing to cut now, especially in the absence of data, is going to bring down the yield on the thing that will move the economy the most?
So we're looking at the real economy and focusing on that. And you've got it when the long bonds move around, you've got to look at why they're moving around. If you look at inflation compensation, it's very, that's one part of it is inflation compensation break-evens. And, you know, they're at very comfortable levels. They're at levels consistent. Once you get out past the very short term now, break-evens are at at quite levels that are quite consistent with 2% inflation over time. So there's nothing happening with rates going up out there that suggests concern about inflation in the long term or anything like that. I mean, I look at these things pretty regularly. Same thing with surveys. Surveys are all saying that the public understands our commitment to 2% and expects us to get back there. So why are rates going up? It has to be something else. It must be, an expectation of higher growth or something like that. And that's a lot of what's been going on. I mean, you saw a big move, toward the end of last year, which was not to do with us. It was to do with other developments.
Well, you just mentioned that the public is expecting you to get back to 2%, and Americans overwhelmingly are citing high prices, inflation, as their number one concern. Can you explain to them why you're prioritizing the labor market, which seems relatively stable to most people, instead of their number one concern, inflation?
So we, as you know, we have a network of contacts in the U.S. economy, which is really unmatched if you go through the 12 reserve banks. So we hear loud and clear how people are experiencing really costs. It's really high costs. And a lot of that is not the current rate of inflation. A lot of that is just embedded higher cost due to higher inflation in 2022 and 23. So that's what's going on. And so the best thing we can do is restore inflation to its 2% goal, and our policy is intended to do that, but also have a strong economy where real wages are going up, where people are getting jobs and earning money, and we're going to need to have some years where real compensation is higher. It's positive, significantly positive. So nominal wages are higher than inflation, for people to start feeling good about the affordability issue. And so we're working hard on that. We're trying to keep inflation under control, but also support the labor market and strong wages, so that people are earning enough money and feeling economically healthy again.
Victoria.
Hi, Victoria Guida with Politico. Just to follow up on that, I mean, this is now the third time that you've cut this year and inflation is around 3%. So is the message that you're sort of trying to send with that you're okay with where inflation is for now, as long as people understand that at some point you still want to get back to 2%, because inflation is relatively stable where it is?
Everyone should understand, and the surveys show that they do, that we're committed to 2% inflation, and we will deliver 2% inflation. But it's a complicated, unusual, difficult situation where the labor market is also under pressure, where job creation may actually be negative. Now, supply of workers has also gone way down, so the unemployment rate hasn't moved that much. But it's a labor market that seems to have significant downside risks. People care a lot about that. That's their jobs. That's their ability, if they get laid off or if they're entering the labor force, to find work. So that's really important to people. The story with inflation, and we're well aware that this is a story at this point, is that if you get away from tariffs, inflation is in the low 2s, right? So it's really tariffs that's causing most of the inflation overshoot. And we do think of those as likely to, in the current situation, as likely to be a one-time price increase. Our job is to make sure that it is, and we will do that job. But right now, you've got this difficult balance, and there are risks to both sides. There's no risk-free path. If it was just inflation and the labor market was just really strong, and then rates would be higher, as they were for more than a year. We didn't have to worry about inflation. Sorry, about the labor market, because the labor market unemployment was very low. If you remember, when inflation was very high, there was a labor shortage, so we could focus entirely on inflation. Now it's different. We actually have risks to both, and I think we're doing the best we can for people. They also care about their jobs. They do care about affordability. And the best thing we can do there is both to support economic activity, but also, make sure that when tariff inflation goes down and disappears, inflation lands around 2%.
Elizabeth.
Thanks so much, Elizabeth Schulze with ABC News. Just to follow up, you keep talking about job growth being negative. Why do you think job growth is so much worse than some of the official data? Why do you think job growth is, to follow up on your comments about job growth, why is it so much worse than the official data is suggesting?
Oh, well, we know, I think I don't think this is particularly controversial. It's very difficult to estimate job growth in real time. They don't count everybody, they have a survey. And there's been something of a systematic overcount. And so we expected, and they correct it twice a year. So the last time they corrected it, we thought the correction would be 800,000 or 900,000. I won't get the numbers exactly right. And that was exactly what happened. So we think that has persisted. And so there's an overcount in the payroll job numbers, we think, continuing, and it will be corrected. I don't have the exact month in my head right now, and that's just, again, I think forecasters generally understand that. So, and we think it's about 60,000 a month, so 40,000 jobs could be negative 20, and that could be wrong by 10 or 20 in either direction. But in any case, but the thing is, that's job creation in a way. That's demand. Labor supply has also come down quite sharply. So, if you had a world where there's just no growth in workers and you really don't need a lot of jobs to have full employment, some people argue that's what we're looking at. But I think a world where job creation is negative, I just think we need to watch that situation very carefully and be in a position where we're not, pushing down on job creation with our policy.
When we're talking about supply, we have seen major American employers like Amazon cite AI in job cuts. How much right now are you factoring in AI into the current weakness in the job market?
So it's probably part of the story. It's not a big part of the story yet. We don't know whether it will be. But, for example, if you look at, you can't miss the big announcements of layoffs and also companies saying that they're not going to hire anybody for a long time, and they cite AI. That's all clearly happening. At the same time, people are not filing for unemployment insurance, and since job creation, job finding rates are extremely low. If there were big numbers of layoffs, you'd expect the continuing claims to go up, and you expect new claims to go up. It really haven't much. So it's a little bit curious. But longer term, though, the question is, what are we going to see here? And we don't know, but it's it may be that in past really significant technology innovation eras, you have seen some jobs destroyed and other jobs made. Ultimately, what's happened for a couple hundred years is, when you get through all that, you have higher productivity and you have new jobs, and there are enough jobs for people. This may be different. It's every time we have a wave of technology, we think, oh, this could put a lot of people out of work. What are they going to do? In the past, there's always been more work and higher productivity, and incomes have risen. What will happen here, we're going to have to see. But right now is such early days. We don't think we see much. It's certainly not showing up in layoffs yet.
Thank you, Chair. Enda Curran, Bloomberg News. Given the breadth of views on the policy committee, why is there such a division of views between
the policy what? On
the committee?
Thank you.
Why is there such a division of views between the presidents and the board members?
It's not so stark as that. The views are more varied in each group as well. There's some of that, but I would say they're also governors and they're people on both sides in both groups. I wouldn't put too much in that.
Okay, and just to follow up, please, given your growth upgrade, how would you factor in, or what would be the economic impact if the Supreme Court is to strike down the tariffs that they're currently hearing, please, in terms of growth and inflation? Thank you.
I really don't know. It would depend. It would depend on a whole bunch of things we don't know. So I can't really help you there.
Christine.
Thank you, Chair Powell. Christine Romans, NBC News. I wanted to ask you about how the higher income households are really driving spending right now. They're backed by home equity and stock market wealth, but lower income consumers are really struggling with the accumulation of 5 years now of rising prices. It's price levels, not really the inflation rate, holding some of these families back. How sustainable is this so-called K-shaped economy, and what are the Fed's thoughts on whether that's a risk going forward?
So we do, through our vast network of contacts and just through our observation of what's going on in the economy, we hear about this a lot. If you listen to the earnings reports for consumer-facing companies that tend to deal with low and moderate income people, they'll all say that we're seeing people, tightening their belts, changing products that they buy, buying less, and that sort of thing. And so it's clearly a thing. It's also clearly a thing that, asset values, housing values, and securities values are high, and they tend to be owned by people more at the higher end of the income and wealth. So as how sustainable it is, I don't know. Most of the consumption does happen by people who have more means. I think the top third accounts for way more than a third of the consumption, for example. So it's a good question how sustainable that is. The best we can do is to have a price stability and a strong labor market. And what we saw, for example, what we saw at the end of the very, very long expansion that ended with the outbreak of the pandemic, we saw that it was 10 years and 8 months or something like that, the longest one in recorded history. In the last 2 years, most of the largest part of the wage gains were going to people in the bottom quartile, the bottom part of the low and moderate income. So, having a strong labor market for a long period of time is really, really good from a social standpoint. It's helping people at the lower income levels, and that's what we all want to get back to. But we got to have price stability, and we got to have full employment, maximum employment.
And just quickly, you mentioned the housing market remains kind of weak. With these rate cuts that we've seen, is there a chance we're going to see more affordability in the housing market so more people can maybe enjoy that part of wealth creation? I mean, the average age or median age of a first-time home buyer is now 40 years old. That's the highest on record.
Yeah, so the housing market faces some really significant challenges. And I don't know that, a 25 basis point decline in the federal funds rate is going to make much of a difference for people. Housing supply is low. Many people have very, very low rate mortgages from the pandemic period, and they kept refinancing and caught the really low. So it's made expensive for them to move. And we're a ways away from that changing. Also, we haven't built enough housing in the country for a long time, and so a lot of estimates suggest that we just need more housing of different kinds. So housing is going to be a problem, and really the tools to address it are we can raise and lower interest rates, but we don't really have the tools to address a secular housing shortage, a structural housing shortage.
Thanks. Chris Rugaber, Associated Press. You mentioned on inflation, services inflation being low, goods inflation looking like maybe it'll peak. We had the wages report you mentioned today showing moderating wage growth. Where are there inflation risks? It looks like inflation is cooling in your view. At the same time, you have potentially negative hiring. Why not? Why aren't we hearing more about maybe more cuts in this environment?
Well, I think the risk in inflation is pretty clear to see, and that is, we see higher inflation. As I mentioned, most of the inflation over target is from goods, and we estimate, we expect, most of us, that inflation will be a one-time price increase and then come down. We just came off an experience where inflation turned out to be much more persistent than anyone had expected. Is that going to happen now? So that's the risk. The risk is either that tariff inflation just turns out to be more and more persistent, maybe because companies who are now holding back from passing through the tariffs will just keep doing that. So you see that. I think the other possibility is less likely, and that is just that the labor market gets tight or the economy gets tight, and you see just traditional inflation. I don't see that as particularly likely. But so I think, again, all across the committee, people see the picture pretty similarly, but see the risks quite differently. And some people do see the inflation risk, and I wouldn't dismiss that case. I don't dismiss that case, but you've got to make an assessment, and this is the assessment we made.
Chair Powell. Neil Irwin with Axios. So this has come up a couple of times today, but to be clear, do you believe that we're experiencing a positive productivity shock, whether from AI or policy factors or whatever? And how much is that driving the higher GDP projection in the SEP?
So yeah, I mean, I never thought I would see a time when we had 5-6 years of 2% productivity growth. This is higher. This is definitely higher, and it was before it could be attributed to AI. I also think if you look at what AI can do, and if you use it in your personal life, as I imagine many of us have, you can see the prospects for productivity. I think it makes people who use it more productive. It may make other people have to find other jobs, though. So it could have productivity implications while also having social and labor market implications that we don't have the tools to deal with. But yes, I think we're definitely seeing higher productivity. I think it's a little quick to be saying it's generative AI, but I don't know. The pandemic may have induced people to do more automation and do more things with computers to replace people, and that raises productivity, output per hour.
Does that imply a higher neutral rate, and therefore the policy might be a little easier than it seems?
All things equal, yes, but all things aren't equal. There are many things pushing in different directions on where the neutral rate would be. But yes, that argument does come up.
Matt Egan.
Thanks, Chair Powell. Matt Egan with CNN. After today, you only have 3 more meetings at the helm of the Fed. Since becoming Fed chair, you've seen multiple trade wars, the pandemic, COVID reopening, period of high inflation. I know your term's not up as chair until May, but I'm wondering if you've given any thought to what you want your legacy to be.
My legacy. My thought is that I really want to turn this job over to whoever replaces me with the economy in really good shape. That's what I want to do. I want inflation to be under control, coming back down to 2%, and I want the labor market to be strong. That's what I want. And all of my efforts are to get to that place. They have been all along, but ultimately, that's what I'm. And it's I don't have time to think about bigger things. I hope many years ahead to worry about that, but there's enough to do.
Relatedly, have you given any more thought, and can you tell us any more about your plans on whether or not you plan to stay on the Fed Board of Governors even after your term as chair expires?
Again, I'm focused on my remaining time as chair. I haven't got anything new on that to tell you.
Go to Mark for the last question.
Chairman, Mark Hamrick with Bankrate. Even while many price levels remain elevated, the reductions in the federal funds rate means that savings rates, or yields to be more precise, have peaked while key borrowing rates remain elevated. And that's, as we've discussed here, as many Americans struggle with liquidity or emergency savings challenges. Is that just collateral damage or an unintended consequence because your tools are limited in addressing individual or household liquidity constraints, insufficient money in the bank?
I don't know. I wouldn't agree that that's collateral damage of our. I mean, over time, we do what we do in order to create price stability and maximum employment, and those things are hugely valuable to all of the people we serve. When we raise rates to bring inflation down, that does work by slowing the economy, but we've moved back our policy back down to where it's certainly not strongly restrictive at this point. I think it's sort of in the range of neutral. So that's what we're trying to do, and I would want people to understand.
I caught up on those calls.
I think what people are feeling is the effect of higher prices. There was a global wave, sort of every large economy in the world, sort of every large open economy, market-based economy in the world had a wave of inflation that looked an awful lot like ours. We actually came through better than any other country, substantially better. We had higher growth, we had better labor market, and this is really due to the American economy. We have an extraordinary economy, and people are innovative, they work hard, and so all of us who work in economics jobs are really fortunate to have the U.S. economy. So thank you very much. what people are feeling is the effect of higher prices. There was a global wave, sort of every large economy in the world, sort of every large open economy.
That was Powell.
Had a wave of inflation that looked an awful lot like ours. We actually came through better than any other.
That wasn't even anything impressive right there.
Growth, we had better labor market, and this is really due to the American economy. We have an extraordinary economy, and people are innovative, they work hard, and so we're all of us who work in economics jobs are really fortunate to have the U.S. economy. So, thank you very much.
All right, let's do the summary. Folks, if you have not yet, check out our AI at househack.com, and of course, check out our courses at meetkevin.com. But for now, let us do
Hello? Yo, Joe, you here? You still here, Joe? Huh? Pred. I don't think I'm fucking with Pred. I don't know. All right. You know, I thought today was going to be a bigger swing. You said, holy fuck, my 687 calls, bro. Yeah, I know. I was looking at the 685s. My 80s did all right. I picked up some calls. I have some swinging into tomorrow. That's what's up. I don't know what you made it in, but if you want to, yeah. Hold on. I got to make another phone call. All right, I got busy towards the end right there. I was getting all these phone calls and shit towards the end. Well, in the middle, as soon as you started talking, I had to take care of some real life shit. Yeah, I thought today was going to move a lot more. It didn't. This was kind of lackluster right here. I'm out of here. I'm gonna figure out